To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Friends, we are just done with discussion about a beautiful and fantastic section known as section 16, which deals with the concept of eligibility and conditions to claim input tax credit. And we just discussed that as per section 16 subsection 2, there are 4 important conditions to be satisfied in order to claim input tax credit. Condition number 1, receiver must have a tax paying document. Receiver must receive the goods or services or both. Number 3, which is the most dangerous point, that is supplier must pay tax to government. Point number 4, receiver must file return under section 39. That is nothing but GSTR 3B. In fact, that is the return in which receiver claims input tax credit. Out of all these 4 conditions, the most craziest condition and the dangerous condition and the most practical concept is all about condition number 3, which specifies that supplier must pay tax to government. That means, for example, we discussed a lot about this. If there is a person A who is supplying goods to a person B, now B can claim input tax credit only if A has paid tax to the government. That is what we clearly discussed. And for that purpose, they brought a beautiful concept known as GSTR1, wherein supplier will file GSTR1 and the credit will reflect to the recipient in GSTR2B. And if supplier files within the due date GSTR1, only then the credit will reflect to the recipient in GSTR2B. And the important point to be noted is that receiver can claim credit only to the extent that is reflecting in GSTR2B. He cannot claim more than what is reflecting in GSTR2B. A very, very important and most practical amendment which has been brought in. In fact, once upon a time, they gave a leverage of 120%, 110% of credit reflecting in 2B. Then they made 105%. Now, finally, we know that amendment is done. Now, receiver can claim credit only to the extent that is reflecting in GSTR2B. He cannot claim credit more than what is reflecting in GSTR2B. A very, very important concept. Now, in this context, my dear friends, there is one more interesting amendment which has been brought in section 16 subsection 2 by Finance Act 2022, where they inserted one clause, that is section 16(2) clause BA, where they have specified that receiver can claim input tax credit on any supply of goods or services or both if it is in the course of furtherance of business only if such credit has not been restricted. Now, what does that mean? If supplier files GSTR1 after the due date of annual return, maybe for example, after 2 years he has filed. For example, if an invoice pertains to 18-19, in 22-23, GSTR1 is filed by the supplier, then how can receiver claim input tax credit? That is not possible. So for that reason, they inserted a clause in 16(2)BA where they have specified that receiver, registered person, can claim input tax credit on any goods, services or both if it is related to the course of furtherance of business only if such credit has not been restricted. There is also one more practical possibility here, that is, for example, Shivateja, a registered person in Telangana, right? Now, I went to Maharashtra for some work in Maharashtra. In Maharashtra, I stayed in a hotel and the hotel person has charged me CGST and SGST in the bill. Even though I am from Telangana, hotel will still charge me CGST and SGST because the type of GST will be charged based on intrastate supply or interstate supply. And if the location of supplier and the place of supply both are in same place, same state, it is regarded as intrastate supply. So hotel fellow will definitely charge me CGST and SGST. Here an important concept to be noted, that is a registered person in Telangana cannot claim credit of CGST, SGST paid in Maharashtra. I can claim credit of CGST, SGST paid in Telangana and I can also claim credit of IGST, but I cannot claim credit of CGST, SGST paid in Maharashtra. That's not allowed. So that means that credit is restricted. That's a very interesting point to be noted. That is the reason why they specifically inserted a clause in section 16 subsection 2 by way of clause BA, where they have specified that ITC can be claimed by the registered person only if such credit is not restricted. Now, my dear friends, there is one more very interesting amendment which is brought by Finance Act 2022, and this is one of the finest amendment which has been brought in, and it has got tremendous significance even in the practical world. Now let me tell you what is this interesting amendment. We just discussed that section 16 subsection 4 deals with the concept of maximum time limit within which input tax credit can be claimed. So friends, what is the maximum time limit within which ITC can be claimed? That is the due date of return for September month following the end of financial year to which such invoice or debit note pertains, or the actual date of filing annual return, whichever is earlier. This point we discussed a lot with an interesting example. Now let me tell you, my dear friends, by virtue of Finance Act 2022, there is an interesting amendment which has been brought with respect to this section 16 subsection 4, which is very important and high possibility that a question will trigger in the exam on this particular concept, my dear friends. That is, that point of maximum time limit, which was actually the due date of return for September month, is now being removed, where instead of that place they inserted the language 30th day of November. That means the maximum time limit within which credit can be availed. This time limit is not with respect to utilization, my dear friends. This is only with respect to credit to be availed. So the maximum time limit within which credit can be availed is 30th November following the end of financial year to which such invoice or debit note pertains, or the actual date of filing annual return, whichever is earlier. So annual return point is still the same, but that language called due date of return for September month is now changed directly to 30th day of November. So to simplify that in simple terms, so for example, my dear friends, let's say for a financial year 21-22, that means April 21 to March 22, if there is some credit which is not claimed, which is pertaining to April 21 to March 22, that credit can be claimed maximum by 30th November 2022, or the actual date of filing annual return, whichever is earlier. Generally, the due date of filing annual return is 31st December following the end of financial year. That is a due date, but it could be filed before also. That's why they specified in the law the maximum time limit to claim input tax credit is 30th November following the end of financial year to which such invoice or a debit note pertains, or the actual date of filing annual return, whichever is earlier. That means for 21-22 financial year, if there is some credit which is not claimed, that credit can be claimed any time before 30th November 2022, or the actual date of filing annual return, whichever is earlier. A very interesting, phenomenal amendment which has been brought in. So practically, we have actually got some more extra time. In fact, when they told the due date of return for September month, we used to be on fingertips and we used to be on our toes to ensure that by 20th October, because the due date for September is 20th October, so by 20th October, we will claim all the credit and do all the reconciliation works for the previous financial year and claim balance input tax credit if anything is missed out. So now, but we have got time till 30th of November. So technically, they extended the maximum time limit to claim input tax credit. It is to be noted that this time limit is only the maximum time limit to claim input tax credit. It is not the maximum time limit to utilize the input tax credit. To utilize, how can they specify maximum time limit? We will utilize when there is output tax. For that, there is no time limit as such. But the provisions of time limit is only to claim input tax credit. So to summarize, my dear friends, after Finance Act 2022 amendment, the maximum time limit to claim input tax credit is 30th November following the end of financial year to which such invoice or debit note pertains, or the actual date of filing annual return, whichever is earlier. That is the end of story of this beautiful, fantastic, outstanding, phenomenal amendment brought by Finance Act 2022 with respect to extending the time limit for claiming input tax credit. This concept is pertaining to section 16, subsection 4. Yes, my dear friends, we spoke about section 16, subsection 4, which deals with the concept of maximum time limit to avail input tax credit. And we spoke about the amendment which is made by Finance Act 2022, something very interesting. And post that amendment, the maximum time limit to avail input tax credit is 30th November following the end of financial year or date of filing annual return, whichever is earlier. Very, very interesting concept, my dear friends. The maximum time limit to claim input tax credit. Now, in this context, one more interesting point, let me tell you that whenever we talk about a person claiming credit, he can claim credit on any invoice, or he may also claim credit on any debit notes. Correct, my dear friends? Because debit note is a document issued by the supplier in order to increase the value or increase the tax. Debit note is a document given by the supplier to the recipient. Imagine a case where Raviteja supplied goods to Shivateja and Raviteja has given invoice to Shivateja, but subsequently there is an increase in value or increase in tax. In that case, what will happen is very clearly Raviteja will give a debit note to Shivateja. In that context, my dear friends, the maximum time limit to avail the credit for Shivateja is what, my dear friends? 30th November following the end of financial year or the date of filing annual return, whichever is earlier. That is the time limit to claim credit by Mr. Shivateja. Now, in this context, one important point to be noted is that should I see 30th November following the end of financial year from the invoice date or from debit note date? Because take a small situation like this. Imagine invoice is dated on 10th Jan 2022, but debit note is dated on 10th April 22. If I take 10th Jan 22, it falls under financial year 21-22. If I take 10th April 22, it falls under financial year 22-23. So which date should be considered for determining 30th November following the end of financial year? For that purpose, they have clarified that if credit is being claimed in relation to debit note, then see the financial year in which debit note is received. That is what is an interesting clarification which they have given, where they delinked the concept of claiming credit on invoice, claiming credit on debit note. If you are claiming credit on an invoice, then what is the time limit to claim the credit? 30th November following the end of financial year to which invoice pertains, or a date of filing annual return, whichever is earlier. If you are claiming credit on debit note, then the maximum time limit to claim the credit is 30th November following the end of financial year to which debit note pertains, or the date of filing annual return, whichever is earlier. A very, very interesting clarification which is given by way of a circular. We are done with discussion about section 17.5 clause B, my dear friends, which talks about various block credit like food and beverages, health services, outdoor catering, cosmetic and plastic surgery. In all these cases, we discussed that input tax credit is blocked. Life insurance, health insurance, what not. 17.5 clause B has got so many points. Now, also, we spoke about one more interesting point there, that is renting, leasing, hiring of motor vehicles or vessel or aircraft referred to in clause A and clause AA. Clause A deals with the concept of motor vehicles, clause AA deals with vessels and aircrafts. Now, an interesting clarification has been given in this regard by way of a circular, where they have clarified that credit is blocked only in case of leasing, renting or hiring of such motor vehicle or vessel or aircraft referred to in clause A or clause AA. But if it is leasing, renting, hiring of any other vehicle or anything else other than this motor vehicles, vessel and aircraft, then definitely credit is allowed. So 17.5 clause B restricts allowability of credit, that is credit is blocked only in case of renting or leasing or hiring of such motor vehicles or vessel or aircraft referred to in clause A and clause AA. But if it is renting or leasing or hiring of anything else, then credit is allowed. This clarification has been given by way of a circular. And let me clarify one point very clearly in this regard, my dear students. That is, in all these points what we discussed in 17.5 clause B, which talks about food and beverages, outdoor catering, health insurance, life insurance, all these points we discussed, right? And second point was what, my dear friends? Membership of a club, health and fitness center. Third point was leave travel concession. In all these points, my dear friends, if they are supplied by employer to an employee under a statutory obligation, that means it is being supplied under an obligation for the time being in force, then definitely credit is allowed. And this point, that obligation for time being in force for the employer, is not just for the last point, but for all the 3 points covered in 17.5 clause B. That means if employer is providing food facility to the employee as per statutory obligation, then whatever GST he pays on that food, credit is allowed because it is on account of a statutory obligation. Next situation, if employer is providing life insurance to the employee on account of a statutory obligation, then whatever GST is paying on getting that life insurance done, that also he can take credit. So ultimately in 17.5b, whatever points are there, if they are taken by an employer and they are provided to the employee on account of obligation as per any law for the time being in force, then definitely credit is allowed. In this concept of 180 days condition, that is, whenever there is a supplier, there is a recipient has claimed credit even though he did not make payment to supplier, since all conditions have been satisfied. Law clearly specified that if the recipient fails to make payment to supplier within 180 days from the date of invoice and is failing to pay the value along with the tax within 180 days from the date of invoice, then whatever credit he has taken shall be added to the output tax liability along with interest, and he can reclaim one payment is made. Now in this context, my dear friends, with effect from 1st October 2022, a small amendment has been done. More or less the same thing, but a small change in implementation. That is, they have specified that if recipient fails to make payment to the supplier within 180 days from the date of invoice, then whatever credit has been availed is to be paid along with interest under section 50. That means earlier they specified that whatever credit they have claimed shall be added to output tax liability. Now the amendment what they have done is whatever credit is claimed shall be paid along with interest. That means you need not add it to output tax liability directly, you have to pay now. That is what is the interesting clarification they have given. In fact, it's not more of a clarification, it's more of an amendment which is done in the law with effect from 1st October 2022, where they have specified that if recipient fails to make payment to supplier within 180 days from the date of invoice, then the credit availed should be paid along with interest. That's it. Earlier it shall be added to output tax liability, but now the answer is it must be paid along with interest. That's it. All story remains same, just a small change in implementation, that's all. That is the story of 180 days condition and 180 days concept. In this context, my dear friends, let me give an interesting clarification which we all know actually. That is, once upon a time at the inception of GST, there was a concept of GSTR1, GSTR2 and GSTR3. But what 2 and 3 have been completely removed. Receiver will take credit based on auto-populated statement in 2A and 2B. Of course, for the purpose of monthly claiming of credit, 2B is important, but for yearly reconciliation, 2A is considered. And the credit is claimed in GSTR 3B. Ultimately, 3B is only the monthly summary return. Now, in this context, one interesting amendment which has been done, where they have clearly told is that wherever there is a concept of GSTR2, those words are omitted because there is no importance to GSTR2 anymore, because straight away credit is claimed by the recipient in the electronic credit ledger while filing GSTR 3B. In 3B only he claim that credit, and he has to claim the credit based on auto-populated statement of credit in 2A and 2B, but for monthly claiming of credit, GSTR 2B is important. Now, in this context, my dear friends, with respect to 17.4 and Rule 38, let me give an interesting clarification which they have given. That is, we discussed that out of total credit, we'll reduce whatever is the credit related to blocked. We'll reduce credit related to personal purpose. And from the balance, we'll also reduce credit related to distinct persons because that 100% credit is allowed. Now, the balance which is left out of that balance, what is allowed is only 50% is allowed and the balance 50% shall lapse. This was the actual language in the law. Now they made a small amendment stating that out of the last balance figure, 50% is allowed and the balance 50% shall be reversed in form GSTR 3B. That means they are just trying to specify that if the balance figure is, let us say, 1 lakh, show that 1 lakh, show that 50,000 reversal in GSTR 3B, so that there is a proper presentation in GSTR 3B. So in short, what they have specified is that 50% is allowed and balance 50% shall be reversed in form GSTR 3B. Yes, my dear students. Now I am sure we got a very good clarity of thought in terms of how input tax credit is to be claimed by the recipient, and I am also sure that you got a good clarity of thought on what is GSTR 2A and what is GSTR 2B. In this context, let me tell you one point very clearly, that this GSTR 2B is an auto-generated statement. Some of them use the language as auto-drafted statement. In fact, this has been modified and amended. They changed the language as auto-drafted statement has been changed to auto-generated statement, and it's obviously very logical because nobody is drafting that statement as such. It is generated based on supplies declared by the supplier in GSTR 1. So from recipient point of view, it is an auto-generated statement. So in short, I want to conclude by saying that GSTR 2B is an auto-generated statement based on which credit is to be claimed by the recipient on monthly basis. In section 29, we just discussed that with respect to cancellation of registration, there are two types of cancellation. Number one, proper officer is suo motu cancelling the registration. Number two, registered person is himself applying for cancellation of registration. Now in this context, my dear friends, in case of proper officer suo motu cancelling the registration, we discussed two interesting points there. That is, number one, in case of a person registered under composition scheme under section 10, he failed to furnish returns for 3 consecutive tax periods. And in case of a person registered under normal scheme, that is other than composition scheme, he has failed to furnish returns for a continuous period of 6 months. Now, in this context, there are two interesting amendments which have been brought in by Finance Act 2022, which is extremely powerful and extremely important. High possibility that question may trigger in the exam. That is, number one, with respect to person registered under composition scheme under section 10, friends, the concept is very clear that in case of a person registered under composition scheme under section 10, he does not file return on quarterly basis. Quarterly, what he does is only quarterly payment of tax. There is a challan known as CMP 08. He will use that challan, he will self-assess the tax payable and he will make quarterly payment of tax. And apart from that, he will file return on an annual basis in a form known as GSTR 4. In fact, the due date to file GSTR 4 is 30th April following the end of financial year. So for 21-22 financial year, the due date to file GSTR 4 is 30th April 2022. Since the methodology of paying tax and filing of return in composition scheme has completely changed, that is quarterly paying of tax and return is filed on an annual basis, they brought a corresponding amendment in section 29, cancellation of registration also, where they specified that in case of a person registered under composition scheme under section 10, PO may suo motu cancel the registration if the registered person has failed to furnish the return for the annual basis, that is annual return, that is GSTR 4 is not filed beyond a period of 3 months from the due date of filing that return. So that means in simple terms they are trying to say that for 21-22 financial year, the due date to file the GSTR 4 is 30th April 2022. If it is not filed within 3 months from the due date, then PO may suo motu cancel the registration. So in case of a person registered under composition scheme, PO may suo motu cancel the registration if the return is not filed beyond a period of 3 months. If the return is not filed within a period of 3 months from the due date of filing return, so once he crosses beyond that 3 months, then PO can suo motu cancel the registration. This is with respect to person registered under composition scheme. And in case of a person who is not registered under a composition scheme, that means a normal registered person, there is a point specified in the law that if he fails to file return for a continuous period of 6 months, then PO may cancel the registration. This point is also amended by Finance Act 2022, where they have specified that in case of a normal registered person, PO may suo motu cancel the registration if the registered person fails to file returns consecutively for such tax periods as may be prescribed. So they removed that word 6 months and made it as such tax periods as may be prescribed, so that if he has failed to file returns continuously for 2 months, PO may cancel. They might prescribe that as 2 months, or they might prescribe that as 4 months. So for that reason, they changed this law and they made amendment in the section, where they have specified in section 29 now. After the amendment, that is, in case of a normal registered person, registration may be cancelled by the proper officer if the registered person fails to furnish returns for such consecutive tax periods as may be prescribed. And in case of composition, if he fails to furnish return within a period of 3 months from the due date of furnishing return, then also PO may suo motu cancel the registration. So this is the interesting amendment which has come up in section 29, which deals with cancellation of registration. Friends, we spoke about section 30, revocation of cancellation. In this context, my dear friends, let me also tell you one interesting latest amendment. That is, we know the concept of section 29, which talks about cancellation or suspension of registration. In this context, they gave an interesting clarification. That is, if the registration is suspended, it's not cancelled, I am telling, if the registration is suspended on account of failure to furnish returns, in that case, my dear friends, if the registered person files all the pending returns, then such suspended registration shall be revoked. That means there shall be a revocation of suspension. In simple terms, what I am trying to say is that if the registration is not cancelled so far, but it is only suspended on account of failure to furnish returns, and if the registered person files all the pending returns, then such suspension shall be deemed to be revoked upon filing of all the pending returns. This is an interesting clarification which has been given, and this amendment has been made. With this discussion, my dear friends, I am sure we got a clear-cut clarity of thought as to what are all the cases where registration may be cancelled suo motu by the proper officer, or a registered person can himself voluntarily apply for cancellation. And we spoke about if a registered person contravenes any provisions of the act or rules which are specifically given, in that case, my dear friends, PO can cancel the registration. In that particular point, 2 more points have been added to that list, where they have specified that in case of monthly return filer, if he has failed to furnish returns for a continuous period of 6 months, then PO can cancel the registration. That is one possibility. Second point they added is that in case of a persons under a quarterly return monthly payment scheme, that is, in case of persons who opted for QRMP scheme, who are filing returns on quarterly basis, if they fail to file return for a continuous period of 2 tax periods, in that case, their registration is also liable for cancellation. So in case of monthly filer, if they fail to file for a continuous period of 6 months. Second, in case of QRMP category, if they fail to file return for a continuous period of 2 tax periods, in that cases, my dear friends, PO may suo motu cancel the registration. Friends, we are done with discussion about the concept of credit note given by section 34. In fact, this section 34 deals with the concept of credit note and debit note. And we just discussed that credit note is a document given by supplier in order to reduce the value or reduce the tax. Credit note is a document given by supplier. Practical example very clearly is that when goods are supplied by a supplier to the customer, when the customer returns the goods, supplier gives a credit note because there is a decrease in the value or a decrease in tax. Now in this context, we just discussed that the maximum time limit to declare the details of credit note in the return is the due date of return for September month following the end of financial year in which supply is made, or the date of filing annual return, whichever is earlier. But let me tell you, my dear friends, to this particular concept, there is a very interesting amendment which has come up by Finance Act 2022. In fact, something very similar to amendment what we discussed in input tax credit chapter. That is, the maximum time limit to declare the details of credit note is 30th November following the end of financial year in which supply is made, or the due date of filing annual return, whichever is earlier. So in simple terms, for a financial year 21-22, if some credit note is given subsequently or if it is given during 21-22, the maximum time limit to report that credit note in the GST returns is 30th November 2022 or the actual date of filing annual return, whichever is earlier. So the concept earlier was September return. That September return story is no more there now. They shifted that directly to 30th November as the maximum time limit. So the maximum time limit to declare the details of credit note is 30th November following the end of financial year in which supply is made, or the actual date of filing annual return, whichever is earlier. This is an interesting amendment brought by Finance Act 2022. Now, my dear friends, let me also tell you one more latest interesting amendment, that is, with effect from 1st October 2022, this e-invoicing is made applicable to every registered person whose aggregate turnover is more than 10 crores. In fact, it was 20 crores earlier, but now they made it to 10 crores. They started off somewhere with 500 crores, then they made 100, then they made 50, then they made 20, now they made 10. So government is in a clear-cut plan of action that in future they'll try to bring everybody into e-invoicing only. But for an exam perspective, e-invoicing is applicable to every category of registered person whose aggregate turnover is more than 10 crores. This amendment is made with effect from 1st October 2022. Friends, we have just discussed about what are all the scenarios and cases and type of persons where e-invoicing is not required even though aggregate turnover is more than the threshold limit, which is now 10 crores. They have given an interesting point in this. They brought an amendment stating that this category of persons on the invoice what they are issuing, they must make a declaration that even though their aggregate turnover is more than the threshold limit, still they are not required to issue e-invoice as per specified rule. They must mention that on the invoice. This has been made mandatory. With respect to electronic cash ledger, we just discussed that there is a provision or a facility given in the law wherein balance in one head can be transferred to another head by way of filing a form known as GST PMT 09. In this particular context, my dear friends, an interesting amendment has been brought in where they have specified that balance in electronic cash ledger by one registered person can be transferred to a distinct person to another head. That means, in simple terms to specify, my dear friends, if there is a company known as ABC Private Limited which has got business in Maharashtra and they have also got business in Gujarat, we know that under GST law, state-wise registration is mandatory. So ABC Private Limited has taken registration in Maharashtra as well as Gujarat. And this Maharashtra GST number and Gujarat GST number are technically regarded as distinct persons, specifying that PAN is same but GST number is different. Now law has specified that if there is a balance in electronic cash ledger in Maharashtra GST number, that can be transferred to electronic cash ledger of Gujarat GST number. That facility is now specified in the law. But this is subject to a condition that there is no liability which is pending in Maharashtra. If there is liability pending in Maharashtra in electronic liability ledger, please pay that liability. But if still there is some excess balance, you can transfer the balance in a cash ledger to another distinct person. This is an interesting concept which has come up, which actually makes a lot of sense also. Apart from this, my dear friends, two more interesting points are specified with respect to electronic credit ledger. That is, number one, in case of electronic credit ledger, they put a provision in the law that they have got powers to specify the conditions and restrictions for utilizing the balance in electronic credit ledger. Obviously, my dear friends, whenever we talk about electronic credit ledger, they always have power to prescribe conditions and restrictions. Apart from that, they also have power to specify what is the maximum proportion of output tax liability that can be paid using electronic credit ledger. That means balance has to be paid using electronic cash ledger only. It's a very interesting concept, my dear friends. So the latest amendment that has come up is that in case of electronic cash ledger, balance can be transferred from one registered person to another registered person provided they are distinct persons. This is with respect to electronic cash ledger. And with respect to credit ledger, there are two amendments. That is, number one, they have got power to prescribe conditions and restrictions for utilization of balance in electronic credit ledger. And they have also got power to prescribe what is that maximum proportion of output tax liability that can be paid using electronic credit ledger. That means balance has to be paid using electronic cash ledger only. Ultimately, government wants revenue, boss. That's the reason why they put all these conditions. Now, my dear friends, let me discuss one very, very interesting amendment which is made by virtue of Finance Act 2022. That is, under section 50 subsection 3, prior to the amendment, there was a concept known as if any person has claimed excess input tax credit or has shown less output tax liability, he was required to pay interest rate of 24% per annum. In fact, those concepts were actually given by section 42 and 43, but these sections 42 and 43 were never being notified. As they were not being notified, these interest provisions could never be practically be applied. For that reason, my dear friends, they now substituted this section 50 subsection 3, where there was a language earlier as excess credit availed or less output tax shown. That concept has now been removed and they substituted that 50 subsection 3. Now they have specified that in case where input tax credit has been wrongly availed and utilized, then the registered person shall be liable to pay interest at such rate not exceeding 24% as may be prescribed. That means now they have specified that the maximum rate of interest can only be 24%. But let me honestly tell you, by virtue of Finance Act 2022, they notified the rate of interest as 18% in case of these kind of circumstances. That is, if the input tax credit is wrongly availed and utilized, then the interest rate will be 18% per annum, which is practically now being notified by Finance Act 2022. But if you strictly look at the amendment of the bare act, that there they have specified that at such a rate of interest not exceeding 24%. But the practical concept is that they notified 18% rate for ITC wrongly availed and utilized. So earlier there was a concept called input tax credit excess claimed output tax less shown under 42, 43 sections. That sections have now been completely removed. So 50 subsection 3 has been substituted now. 50 subsection 3 specified that if input tax credit is wrongly availed and utilized, then the registered person is required to pay interest at such rate not exceeding 24%. And practically by virtue of Finance Act 22, they have notified the interest rate as 18%. It is always to be noted that generally these kind of rates and all are notified by the government on the recommendations of the GST Council. So that is the end of story of this beautiful section, section 50, which deals with the concept of levy of interest. Now, my dear students, with respect to electronic cash ledger, we discussed what are all the modes through which amount could be deposited in electronic cash ledger. In this context, we clearly discussed that the various modes of deposit in cash ledger are something like over the counter, internet banking, NEFT, RTGS. In fact, there is a concept in the law about credit card, debit card also, but practically they are not being implemented, but that option is there in the law. In this particular list, my dear friends, that with respect to various modes of payment, they have added two more options. That is number one, payment through UPI from any bank. UPI is basically Unified Payment Interface, or payment through IMPS from any bank. IMPS is Immediate Payment Service. So these two extra modes of payment, or these two extra modes for a deposit in cash ledger has also been included. So in fact, government is trying to increase all the possible sources for a deposit of money in electronic cash ledger. My dear students, we spoke about the concept of interest under section 50, wherein interest is levied for a delay in payment of tax to the government, and also interest is levied in case where input tax credit is wrongly availed and utilized. Obviously, when it is utilized only, interest will come into picture. Now, in this context, my dear friends, a new rule, Rule 88B, has been introduced, which gives a clear-cut clarity on how do we calculate interest, where they have specified that in case where output tax liability, input tax credit has been declared in a particular month return and the return is filed after the due date, then the interest is calculated on that amount of tax which is paid using electronic cash ledger. And the interest will be calculated beyond the due date of furnishing of return. That means if the due date of furnishing of return is 20th and it is filed on 28th, then the interest will be computed from 21st to 28th, and the interest is calculated only on that portion of tax which is paid using electronic cash ledger. This is a case where interest is calculated on the tax which is paid through return. Second situation, in case of any other tax which is due, then the interest is calculated from the due date, that is from the date when the tax is due till the date when such tax is paid. Third case, in case where input tax credit is wrongly availed and utilized, then in that case, my dear friends, interest is calculated under section 50 and it is to be paid from the date when such credit is availed and utilized till the date when it is reversed or paid. For that period, interest is calculated. And moreover, when do we say that input tax credit which is wrongly availed is utilized? Imagine a case where the total credit in credit ledger is 6 lakh rupees. Out of that 6 lakh, 4 lakh rupees is wrongly availed. If at any time electronic credit ledger balance goes below 4 lakhs, then we say that the input tax credit wrongly availed is being utilized. Then on that, interest is required to be paid from the date when it is utilized till the date when it is reversed or paid. For that period, interest is levied. And if it is utilized through return filing, then the date of filing of return is considered. And in case where it is utilized other than return filing, then the date when that amount is debited, that is considered. Ultimately, if the input tax credit which is wrongly availed is utilized, then the interest will be computed from the date when it is utilized till the date when it is reversed or paid. This is an interesting clarification which is given with respect to computation of interest given by Rule 88B. Now, my dear students, let me discuss 2-3 interesting clarifications which in fact we already know, my dear friends. That is, number 1, balance in electronic credit ledger can be used for payment of any output tax. Output tax does not include tax payable under reverse charge mechanism. That is the reason why credit ledger balance can be used for payment of any tax except tax payable under reverse charge mechanism. Moreover, balance in credit ledger can be used only for payment of output tax but not any interest or penalty or fees or fines. So if any interest or penalty or late fees is required to be paid, that can be paid only and only using electronic cash ledger. So these are the interesting clarifications which have been given with respect to electronic credit ledger and electronic cash ledger. Friends, we are done with discussion about the concept of section 31, which deals with concept of furnishing of statement of outward supplies in a form GSTR1. In this regard, we discussed very clearly what are the contents of GSTR1, what are the details we will disclose in GSTR1, that is statement of outward supplies. And I'm sure by this discussion we understood very clearly that GSTR1 is a very important statement which is filed by the supplier. Because ultimately when GSTR1 is filed by the supplier within the due date, only then the credit will reflect to the recipient in GSTR2B. If the supplier files GSTR1 after the due date, credit will reflect to the recipient in GSTR2A but not in GSTR2B. Ultimately, credit is to be claimed by the recipient only and only based on GSTR2B but not GSTR2A. That is the reason why it is very important that supplier must file GSTR1 within the due date, and generally the due date concept is 11th of next month, except in cases covered under QRMP scheme, that is quarterly return monthly payment scheme, which we'll talk separately. But generally the due date to file GSTR1 is 11th of next month. So for example, if it's October month, the due date to file GSTR1 for October is 11th of November. For November, it is 11th of December. That's how it works. Now let me tell you an interesting concept here. That is, when we talk about this GSTR1, which is a statement of outward supplies, in GSTR1, there is a separate column for B2B, separate column for B2C. And under B2C, there is again B2C large, B2C small, also known as B2C others. So details are reported to the minutest extent possible in GSTR1 so that recipient can claim the credit based on auto-populated data in GSTR2A and 2B. And ultimately, very practical point I am sharing with you, that is, recipient is supposed to claim the credit based on credit whatever is reflecting in GSTR2B. That is very important point. Now, here let me discuss 2-3 very interesting amendments which is brought by Finance Act 2022, and 1-2 points are extremely important, my dear friends. That is, point number 1, Finance Act 2022 has specified that section 37 they amended with one point stating that officer has got a power, that is, central government has got a power on the recommendations of GST Council to prescribe conditions and restrictions in relation to furnishing of GSTR1. So that power is enabled in the section itself so that tomorrow government can come up by way of notification to impose some restrictions or conditions. That is amendment number 1. Amendment number 2, initially when GST law started way back in 2017 July, that is 1st of July 2017, already we know that they wanted to have a two-way communication process. That is, supplier will file GSTR1, data will come to recipient will accept or reject. If he accepts or reject or he can modify, it will go back to supplier again, then supplier will again accept it. So that two-way communication process was originally thought, and that was actually there in the law initially at the time of inception of GST. And they specify that every registered person should file statement of outward supply, statement of inward supply, monthly return. All this different concept was originally proposed, but that could not be effectively implemented as such. The reason being, India is a country where too much of voluminous dealers are there, and it has become practically ground level difficult for the government to impose both GSTR 1, 2, 3 and all, and it became a difficult mechanism to do the tracking activity. So they decided initially itself that they'll implement only GSTR 1 monthly return and GSTR 3B summary return. So as on today's date, there is no concept of GSTR 2 statement of inward supplies. There is no concept of filing of statement of inward supplies. Getting, my dear friends? Now, initially, when government thought they'll implement GST in 2017, this was a proposal that statement of outward supply, statement of inward supply, all this plan was there. But this mechanism was never implemented. It was only 1 and 3B. So as on today's date also, supplier will file GSTR1, credit will auto-populate recipient in GSTR 2A and 2B, and receiver is supposed to take credit as per GSTR 2B. That's all. That is the reason why they made one more amendment in the law in section 37 and they removed the concept of two-way communication process. That is, supplier will file, receiver will accept or reject. Again, it will come to supplier. All that story is now there. In fact, it is not there right from beginning itself. So now they amended the law saying that this concept will never come into picture. So in future, there is no concept of statement of inward supplies filed by recipient. To take credit, receiver has to just see 2A and 2B. He cannot modify anything in 2A and 2B. But he can contact supplier to file GSTR 1. But he cannot modify anything in 2A and 2B. So this is one interesting amendment which has come up by Finance Act 2022. Now one more interesting amendment which has come by Finance Act 22, friends. This is very, very interesting. That is, listen, they have specified that if GSTR 1 of previous month is not filed, then GSTR 1 of current month cannot be filed. That means, let's take an example here. Let's say there is one person, Mr. Ravi Teja, who is a stationery dealer registered under GST law. He wants to file GSTR 1 for the month of August 2022, but for previous month, maybe July 22 or June 22, whatever it is, previous month GSTR 1 is pending. If previous tax period GSTR 1 is pending for filing, then the current month GSTR 1 cannot be filed. This amendment has been brought by Finance Act 2022. And the very practical reason for this amendment is very clear, friends. Lot of people are skipping some GSTR 1 and filing only which is feasible for them and required for them. So they don't want any kind of interplay or something with the government. So they want to ensure that they will recover the revenues on time sequentially for all the tax periods. That is the reason why they specified that if previous months GSTR 1 is pending, then the current month GSTR 1 cannot be filed. One more very, very interesting amendment made by Finance Act 2022, my dear friends. That concept is very simple and easy to understand because similar amendment has been done at different places. What is that? Let me tell you now. That is, friends, we know that this GSTR 1 and in fact for that matter GSTR 3B also, this GSTR 1 statement of outward supplies, once filed, it cannot be revised. We know this point, right? Exactly. Now, GSTR 1, once it is filed, that cannot be revised. So, in this context, my dear friends, if there is any mistake or any omission or any misstatement in GSTR 1 of a particular month, that mistake can be rectified by virtue of an amendment column in next month GSTR 1. So, in GSTR 1, there is a specific column for amendment. We can make use of amendment column and in subsequent month GSTR 1, we can rectify that mistake. But the actual GSTR 1 which is filed, that cannot be revised. Now, what is the interesting point to be noted is that to make that amendment, there is a maximum time limit that is prescribed in the law, which we already discussed. That is the due date of return for September month following the end of financial in which supply is made or the actual date of filing annual return, whichever is earlier. We spoke this concept a lot. Exactly. Now, in this particular concept, there is an amendment which is brought by Finance Act 2022, where they have specified that the maximum time limit for rectification of any mistake, omission, that is, the maximum time limit to make an amendment is now, that is, 30th November following the end of financial year in which supply is made or the actual date of filing annual return, whichever is earlier. So what was the concept before? The concept before was due date of return for September month following the end of financial year. That means we will see September month return date or the actual date of filing annual return, whichever is earlier. This point is now amended by Finance Act 2022, where they have specified that the maximum time limit for doing the amendment for the purpose of rectification of any mistake, error, omission is 30th November following the end of financial year in which supply is made or the actual date of filing annual return, whichever is earlier. This interesting kind of amendment already we discussed in input tax credit also, even in credit note also. Similar amendment is made even in GSTR 1. In fact, similar amendment is made even in GSTR 3B also. That also we'll talk soon. Clear, my dear friends? That's it. That is the end of story of this very, very interesting section section 37, which deals with the concept of GSTR 1. Yes, friends, we are done with the discussion about the concept of section 37, which deals with statement of outward supplies, which is furnished in form GSTR 1. Now let's talk about section 38, which was a very important section initially at the time of inception of GST, but was never implemented practically. That is, section 38 was actually dealing with the concept of statement of inward supplies to be filed by the recipient in GSTR 2. But now that they have removed, that is, they have done away with this concept of two-way communication, there is no concept of statement of inward supplies to be filed by the recipient. That is the reason why Finance Act 2022 has substituted section 38 original section, and now they have specified in section 38 simple language, that is, the details of the input tax credit shall be communicated to the recipient based on statement of outward supplies furnished by the supplier. That means if A is supplier, B is recipient, B credit whatever he can claim can be seen by B in form GSTR 2A and 2B. What is 2A, 2B difference? All that we know already very clearly. So receiver can only claim the credit based on the credit which is auto-populating in the statement. He cannot modify anything, he cannot submit anything, but he has to claim the credit based on credit which is auto-populated in the statement. And in that statement, that is 2A, 2B, it is clearly mentioned what is the credit that can be claimed, what is the credit that cannot be claimed, what is the credit that can be partially claimed. That is also specifically mentioned in GSTR 2A and 2B. And we know the importance of 2A, 2B. The point to be noted always is that for the purpose of monthly claiming of credit, matching is done with GSTR 2B. But for overall yearly reconciliation, credit is compared with GSTR 2A. So this is an interesting concept of section 38, which no more talks about statement of inward supply, but it only talks about the receiver to claim the credit. That is the recipient to claim the credit based on auto-populated statement which reflects the input tax credit based on statement of outward supplies filed by the suppliers. Now friends, we are done with discussion about the concept of section 39, which deals with furnishing of returns, and generally the due date to file the return is 20th of next month and it is filed in form GSTR 3B. Now in this concept of GSTR 3B, there are 2-3 interesting amendments which are made by Finance Act 2022. Let's discuss what are those. That is, amendment number 1. We know that very clearly every month when we file GSTR 3B, we will calculate what is the output tax payable based on outward supply. We will figure out what is the input tax credit based on auto-drafted statement in GSTR 2A and 2B. Take that credit, set off that credit with the output tax payable, net if any to be paid, that amount is paid from electronic cash ledger and GSTR 3B is filed. That means very clearly the output tax payable and the input tax credit is self-assessed by the registered person. Now in this context, one amendment has been made in Finance Act 2022 where they have specified that a registered person can self-assess the tax payable and also the input tax credit and pay the tax due thereon, or he may pay such amount determined in such manner and subject to such conditions as may be prescribed. That means a registered person has an option directly to pay the tax as self-assessed by him, or he may pay such amount subject to such conditions as may be prescribed. What is that will be prescribed? We have to wait and watch. So basically they put a provision in the law so that government may prescribe something in the future. To enforce that power, they put a provision in the law. Ultimately, any notification can come only by virtue of power given in the law. For that reason, they have brought this point in section 39. Now, one more very interesting amendment corresponding to section 37 ITC credit note. That is, if there is any mistake in GSTR 3B, we cannot revise GSTR 3B. That is the reason why next month we can modify the figure. And the maximum time limit for rectification of any mistake or omission was earlier due date of return for September month or date of filing annual return, whichever is earlier. Now that point is amended. Now what is the story after amendment? The maximum time limit to rectify any mistake, error, omission is 30th November following the end of financial year in which supply is made, or the actual date of filing annual return, whichever is earlier. So that September is now replaced directly by 30th November following the end of financial year in which supply is made, or the actual date of filing annual return, whichever is earlier. This is one more very interesting and important amendment in relation to maximum time limit for amendment, correction of any mistake, omission or misstatement. One more interesting amendment in section 39, my dear friends, that is, once upon a time there was a provision in the law very clearly which we already discussed, that is, a return for the particular month cannot be filed if previous month GSTR 3B is due. That means October GSTR 3B cannot be filed if September 3B is due or any previous month 3B is due. Correct, my dear friends? In the same lines, they brought one more extra point in the law now. That is, if a person intends to file July month GSTR 3B, he cannot file July 3B if previous month 3B is pending, or July GSTR 1 is pending. That means July 3B cannot be filed unless July GSTR 1 is filed. So, in nutshell, if for a particular tax period, if a registered person intends to file GSTR 3B, he has to ensure that all the previous month's 3B is done and also ensure that current month GSTR 1 is also done. Only then he can file current month GSTR 3B. However, my dear friends, government may, on recommendation of the GST Council, subject to such condition and restrictions, they may give relaxation to specified category of persons. They always keep this kind of general clause in the law so that anytime in the future they want to give relaxation to some category of persons, they can give that. For that reason, they put this kind of clause in the law. That is the story of amendments in GSTR 3B dealt by section 39. And these amendments are made by virtue of Finance Act 2022. Section 41 deals with the concept of claim of credit on provisional basis. Initially, when the GST law started in 2017, they have specified that receiver can claim the credit provisionally and that credit will be matched with the credit that is auto-populating in the statements, and then reconciliation will happen for the matched credit, and then notices will be given to the respective persons if there is any shortfall or excess. Now, the interesting point to be noted here is that section 41 is amended by Finance Act 2022, where they specified two interesting points. Point number one, the input tax credit to be claimed by the registered person can be claimed by the registered person on self-assessed basis. And this is subject to conditions and restrictions as may be prescribed. Ultimately, we know the concept that receiver will claim the credit on self-assessed basis only. Of course, he has a facility to match with GSTR 2A, 2B, but he can and he is supposed to claim credit on the self-assessed basis only. And moreover, they have also specified that if recipient has claimed a credit, but supplier failed to pay the tax to the government, then recipient has to reverse the credit what he has claimed. And subsequently, when supplier pays the tax to the government, that credit which is reversed can be reclaimed. Ultimately, very logical point. In input tax credit chapter also we discussed one of the foremost condition to claim credit is that supplier must pay tax to government. So if supplier has not paid tax to the government, whatever credit recipient has self-assessed and claimed should be reversed by the recipient. And then recipient can reclaim when supplier paid tax to the government. That's it. Pretty simple point, my dear friends. That is about section 41, claiming of credit. My dear friends, we have discussed the concept of section 48, which deals with GST practitioner. In this context, we have discussed what are all the activities that GST practitioner can undertake on behalf of registered person. There we discussed that he can furnish statement of outward supply and he can also furnish statement of inward supply. This point has been amended with effect from 1st October 2022. The reason being there is no concept of filing of statement of inward supplies. So that language has been omitted. So what he can do is only filing statement of outward supply because there is no concept of filing of statement of inward supply because GSTR 2B is only an auto-generated statement. And moreover, the forms earlier which were notified like 1A, GSTR 2, GSTR 3, all these have been omitted. So as on today's date, what a registered person is required to file is only GSTR 1 and GSTR 3B. That's all. GSTR 1 is a statement of outward supplies to be filed by 11th of next month. GSTR 3B is a monthly return. Of course, we separately spoke about the concept of QRMP scheme, quarterly return monthly payment scheme. So these are all the interesting points what we have got in this beautiful topic of returns. So my dear students, I am sure we got a good clarity of thought in terms of what is the return that is to be filed by NRTP, that is nothing but GSTR 5, which is actually the original due date as per law is 20th of next month or within 7 days from last date of registration. But the point to be noted here is, let me tell you one very interesting amendment made by Finance Act 2022, where they have revised the due date to file GSTR 5 by NRTP. Originally, the due date to file GSTR 5 by NRTP was 20th of next month, but that is changed by Finance Act 2022 to 13th of next month. So 20th is now changed to 13th of next month. So the due date to file GSTR 5 by NRTP is 13th of next month. So it's something like as good as ISD, that is GSTR 6, that also due date is 13th of next month. Same thing they have done even in case of NRTP now by Finance Act 2022. So by virtue of Finance Act 2022, in fact with effect from 1st October 2022, they changed due date of filing return by NRTP, that is GSTR 5, which the due date is henceforth 13th of next month. So my dear friends, let me also tell you one more interesting point here, which already we discussed in different sections and different circumstances. That is, with respect to rectification, we have discussed what is the maximum time limit within which any mistake or error or omission can be rectified. We know that we cannot revise it. We have to do that rectification in subsequent month return. And now, by Finance Act 2022, there is an amendment with respect to maximum time limit within which rectification can be done. That is, 30th November following the end of financial year or actual date of filing annual return, whichever is earlier. This is the maximum time limit for the purpose of rectification of any mistake, error or omission. This is a very fantastic amendment made by Finance Act 2022. In this context, my dear students, one interesting amendment is to be noted that even though the BEAR Act specifies that the due date to file GSTR 1 is 10th of next month, it has been subsequently extended wherein the practical due date and also the extended due date is actually 11th of next month. And in case of persons opting for QRMP, that is only for those whose aggregate turnover does not exceed 5 crores. We will talk in detail separately about QRMP. In case of persons opting for QRMP, the due date is 13th of next month. And it is not basically GSTR 1. They submit the details in IFF, that is Invoice Furnishing Facility, for first month and second month of the quarter. But once third month is over, they will file GSTR 1 for the whole quarter. There also the due date is 13th of next quarter. I hope we are getting clarity, my dear friends. That is 13th of next month, succeed in the end of quarter. We will talk more in detail when we go to the concept of QRMP, quarterly return monthly payment scheme. But for persons other than those who opted for QRMP, the extended due date as per the law is 11th of next month. In fact, originally in the BEAR Act, they have specified initially that from 11th to 15th, you are not allowed to file GSTR 1. But that language has been deleted now, because the actual due date now practically and the extended due date is 11th of next month. And once 11th is over, you cannot file GSTR 1 at all. You are getting my point, everybody? If you want to file GSTR 1 after 11, you can file if you want. But you have to end up paying late fees and other stuff. And without filing GSTR 1, you cannot proceed to file GSTR 3B. Already we discussed this point in detail. Getting clarity, my dear friends? About QRMP scheme, we'll talk in detail separately in a different video altogether. Getting clarity, friends? I hope we are clear with this point. So once upon a time they told from 11th to 15th GSTR 1 cannot be filed, but that point no more exists because the actual due date has been extended in GSTR 1 by the extension, that is 11th of next month you can file. And if you file after the due date, you have to end up paying late fees. And moreover, the biggest problem than late fees is that receiver will not see the credit in GSTR 2B if supplier files after 11th. That is the biggest challenge, which is to be noted. One interesting amendment made in this regard, my dear students, that is, we discussed that provisions of late fees will come into picture in case where there is a delay in filing statement of outward supplies under section 37 or returns under section 39, or final return under section 45. I'm talking about section 47 subsection 1 because that talks about late fees related to this. 47.2 talks about late fees related to annual return. Now in 47 subsection 1, my dear friends, they have also added reference to one more section, that is section 52. So in case of delay in filing related to returns or statements under section 37, 39, 45 or 52, then the provisions of late fees will apply. And 52 deals with filing of return by e-commerce operator who is required to collect tax at source. So this is the amendment which has been done, my dear friends. That is in 47 subsection 1, apart from section 37, 39, 45, they have also included reference to section 52. So in case of 37, 39, 45, 52, if there is a delay in filing, then the provisions of late fees will attract as per provisions of section 47 subsection 1. So friends, we just discussed that we are talking about section 7.2a, which deals with the concept of transactions which are neither regarded as supply of goods nor regarded as supply of service. The fundamental logic is something like negative list the transactions which are neither supply of goods nor supply of service. That means this clearly are those cases where GST will not apply. In that first point we have been discussing, that is services by employee to employer in the course of employment. In this context, an interesting circular has been released which has given an interesting clarification with respect to perquisites provided by employer to employee. What are perquisites? I am sure you would have heard in income tax that perquisites are those kind of monetary or non-monetary benefits which are given by employer to employee in the course of employment. For that reason, they have clarified very clearly that perquisites which are provided by employer to employee as per the contractual obligation are neither regarded as supply of goods nor regarded as supply of service. That means provisions of GST will not apply. So what am I trying to say, my dear friends? I am just trying to explain to you very clearly that perquisites which are provided by employer to employee, which are as per the contractual obligation between employer and employee, shall not be subjected to GST. So in simple terms, that's why we say practically that salaried employees need not pay GST on the salary, allowances, perquisites what they get. Because services provided by employee to employer in the course of employment is neither regarded as supply of goods nor regarded as supply of service. That means GST will not apply. However, my dear students, it is very important to know that perquisites provided by employer to employee in terms of the contractual agreement, that is only exempt. But if something is provided which is outside the contractual agreement, then that shall become taxable. This point is always to be kept in mind. Very, very interesting concept. The reason being very clear that service by employee to employer in the course of employment is only not covered. In the course of employment means it should be as per the contractual agreement. Now, my dear friends, we are done with discussion about the concept of supply, and we are also done with discussion about the concept of composite supply and mixed supply. Now let's look at some interesting element, that is some special cases. What is the tax treatment in case of liquidated damages or any fine or penalty that is imposed in certain different circumstances? Let's take a small example like this. That is, let's say we have deposited one check in the bank, and if the check is dishonored, bank will levy some charges for dishonor of that check. That is one possibility. Let's take second situation like this. That is, in the event of failure to fulfill the contract within the specified time, the counterparty has imposed for liquidated damages some kind of compensation paid since the payment is not honored on time or the work is not done on time. Next possibility, that is, in case where a flight ticket or a railway ticket or a bus ticket is booked, sometimes pre-hand or on the day itself, the ticket is cancelled for multiple reasons. When a travel ticket is cancelled like that, the travel company charges cancellation charges. We all know this, right? Exactly. Now here we are to talk about what is the tax treatment for these kind of transactions, whether it is taxable or not, whether it is supply or not. This concept will flow from 2-3 interesting language. That is, there are 3 kinds of transactions which are regarded as supply. Number 1, agreeing to an obligation to refrain from an act. That means not doing something what you are supposed to do. Agreeing to an obligation to refrain from an act, or agreeing to an obligation to do an act. I repeat again, we are talking about 3 special cases here, my dear friends. That is, agreeing to an obligation to refrain from an act, or agreeing to an obligation to tolerate an act, or agreeing to an obligation to do an act. So, doing something or tolerating something or not doing something, that is also a supply. Correct, my dear friends? We discussed that point already. Exactly. Now listen very clearly here. Let's take a small situation like this. Let's say there's an apartment building of 5-floor building. Beside that apartment or beside that building, there is one more builder who is coming up with a construction of 8 floors building. But the 5 floors apartment building guy contacted the person who wants to construct 8 floors and told him that, boss, you also please construct only 5 floors. If you construct 8 floors, we'll have a problem for sunlight and other problems. And he said that I will give you compensation for not constructing that 3 floors. So it is something like it's an agreement or an obligation to refrain from an act. So he wanted to do 8-floor construction, but now we'll do only 5-floor construction. Exactly. That's one possibility. Now, one more interesting possibility. There is one person who got a clearance to set up one factory at a particular place. But all the people in that society or in that locality came together and told that industrialist that, boss, you please don't set up factory here. We'll give you 10 lakhs, please walk out. That is also one possibility. So, we are talking about 3-fold issue here. That is number 1, agreeing to an obligation to refrain from an act. Agreeing to an obligation to tolerate an act. Agreeing to an obligation to do an act. So these 3 cases are covered in one particular point. Now the interesting issue here is what they have clarified, that is, in all these 3 cases, the question of taxability, the question of supply will come only when 2 conditions are satisfied. Condition number 1, there must be an agreement which could be express or implied or contractual agreement. There must be an agreement which is in place. Condition number 2, there must be some consideration which must flow in pursuance of such agreement. So that means point number 1, condition number 1, there must be an agreement which could be express, implied or contractual. Condition number 2, there must be some consideration which must flow in pursuance of such agreement. Only then this will be regarded as supply. Only then it shall become taxable. Now let's take 2-3 interesting cases here. That is, situation 1. Let's take a case like this. That is, let's say there is one open land where government is conducting an auction. Okay? When government has conducted an auction, there is one bidder who has successfully bid that particular open land, and let's say he quoted the price of 1 crore and the bid is successfully accepted. Government specified him that, boss, you please pay 5 lakh and balance 95 lakh to be paid within 1 month. And here what happened is, within that 1 month, the 95 lakhs was not paid by the successful bidder. Now what government has done is, they have forfeited that 5 lakh. Basically it is forfeiture of that earnest money deposit, EMD they call it. That 5 lakhs has been forfeited by the government. Now tell me one point very clearly here. Now is there a contract between government and that successful bidder stating that you please don't pay the balance amount, only then we will forfeit? Is there an idea something like, you please don't forfeit, I want to please forfeit? That's not the idea. The forfeiture was done only as a kind of compensation or penalty that was imposed since the bidder did not make the payment on time. The idea was not to forfeit the money first. The original intention was to ensure that the transaction is done. And since the transaction was not done properly, since the payment was not done properly, that amount was forfeited. But the original contract was not to forfeit the money. So in that case, they specified that there is no contractual agreement or obligation to forfeit that money. Means the contract is not for forfeiting the money. That's why they specified that this transaction is not regarded as supply. But other case, let's say you see a case like this. Let's say there is one tour operator. Shivateja wants to travel to foreign. I signed a contract with the tour operator. In the contract only, tour operator specified that in the event you cancel the tour, then whatever amount you paid, 20% will forfeit, balance amount only will give. That means it is specified in the contract itself. It is a contractual obligation only, where prima facie the first element is taxable. That means tour operator activity is taxable. Then this second transaction also, which is a kind of ancillary transaction, even that shall become taxable. There is no doubt about it. Ultimately, the whole idea you have to look at is whether the agreement was entered to do the transaction or it is entered not to do the transaction. If the agreement is entered to do the transaction and if something happened because of which some activity has happened and if that is correlated to the original transaction, then taxability may come. If not, there is no question of taxability. Let's take one more interesting example here. So let's say there is one ice cream brand, Quality Walls. There is one more person who has come up with one more brand name like that, Quality Walls. He is using the same brand name of Quality Walls and manufacturing ice creams. Original patent owner has filed a case against another party who is making use of the patent or copyright owned by the original ice cream manufacturer. Then what has happened is the original person filed a suit in the court of law and claimed for damages. So basically he asked for liquidated damages. Now tell me, will this liquidated damage be taxable? Strictly speaking, answer is no. I'll tell why. The reason because there is no contract between the original guy and the replicate guy saying that, boss, you manufacture ice creams like me, I will file a case on you, you pay me compensation. Is there a contract like that? No. So when there is no contract like that, how can that be taxable, boss? That is a concept to be noted here. That is the reason why they gave specific clarification in this regard, stating that there must be two important conditions to be satisfied in order to tax these kind of transactions. Number one, there must be an agreement which could be expressed, implied or any kind of contract. Number two, consideration must flow in relation to that contract or agreement. Only then these kind of transactions will become taxable. Let's look at another interesting situation, guys. That is, let's say any bank, let's say there is a bank or there is any supplier who has charged some extra money as an amount for check dishonor. That means, for example, there is a person Shivateja, there is another person Raviteja. Raviteja has given a check to Shivateja for some service what Raviteja has taken. And what I have done is, I deposited the check in the bank. But for multiple reasons, for whatever reason it is, the check got dishonored. There is no bank balance in Raviteja's account. So check got dishonored. So what I have done is, I collected some extra charges from Raviteja. Now tell me, is that charges taxable? Strictly speaking, answer is no. Why? Because my intention of depositing the check is not to ensure that check will get dishonored, I will collect extra charges from Raviteja. That's not the idea. Any businessman wants the check to be honored. Not, the whole idea is not check to be dishonored and take extra money. That is never the idea. The idea is to ensure that check is honored and the money is received. So this is not a kind of consideration for any agreement or contract. So this check dishonor charges which supplier has taken from the receiver is not a kind of consideration for any agreement or any kind of service or contract. That is the reason why these kind of transactions are not taxable. So ultimately these kind of transactions are taxable only when there is an agreement which is expressed, implied or any kind of contract, and there must be consideration in pursuance of such contract or agreement. Only then these transactions are taxable. Same logic will apply even for any fines or penalties imposed by the government for violation of law. The fundamental logic is being very clear that Shivateja, for example, I am going on a bike and the speed limit is there is 80 kilometers per hour. Even though speed limit is 80 kilometers per hour, I am going at 160 kilometers per hour. And the traffic police has stopped me and asked me to pay a fine of 1000 rupees. Now you please tell me, did I ever sign a contract with the government saying that, boss, I'll violate the law, I will go at 160 speed, I will pay you 1000 as challan. Is there a contract like that? You can never sign a contract for violation of law, boss. So government is levying some fine. They are not levying fine for allowing you to do something. They are levying fine because they want to discourage somebody to do something like this. So any fines or penalties imposed by the government for violating any provision of the law is not taxable under GST law because there is no agreement as such to provide that kind of service. Finally, let's look at one more interesting clarification in this regard, my dear friends. Let's say there is an employer, there is an employee. employer at the time of employee joining the company, he made the employee sign the contract for a period of 2 years. And in the event of employee leaving the job, even before completing 2 years, that is breaking the bond, employee would be required to pay a fine or penalty of 1 lakh. Now my straight question to you, is this 1 lakh fine or penalty taxable under GST law? Question starts. And now students will start thinking that yes sir, it should be taxable, no sir, it's not taxable, all multiple thoughts will keep coming. Now let me tell you very clearly, it is mentioned in the agreement itself that if the employee does not complete the period of 2 years, then he has to pay that 1 lakh. But I'll ask you one question, you think properly and tell me. Imagine a case where employee has not fulfilled the contract and that means he has violated the bond. Since employee violated the bond, employee ended up paying that amount of 1 lakh rupees to the employer. Now tell me, by paying that 1 lakh to the employer, did employee get anything? Answer is no. And this 1 lakh penalty or fine which is imposed, it is actually not that this 1 lakh you have to pay because I want to tolerate your wrong act and all. That's not the idea. Generally, this kind of contract of this employment is entered only to understand the long-term visibility of the employee and seriousness towards the job by the employee. And if this bond is broken by the employee and violated, then that amount is collected not for tolerating that. This is basically penalty for not tolerating that act. It's a kind of fee which is imposed for which employee is not getting anything. Getting my dear friends? That is the reason why this kind of transaction shall not be taxable. The whole logic of that point is that employer has not taken that 1 lakh from the employee as a consideration for accepting that act or tolerating that act. It is basically a kind of penalty which employer has imposed to discourage doing this kind of acts. That is what you have to understand here. If any amount is received because he is ready to tolerate that act and that is the only intention of that person, then that is different, story is different. But here, this is not a consideration for tolerating an act. This is basically a kind of penalty which is imposed on the employee because he has not fulfilled that bond or contract. Chapter number 3, charge of GST. In that video number 27, who can opt for composition scheme? At the end of the video, we will add the amendment what I am recording now for both inter as well as final. Friends, we just discussed that there are 4 new goods which are added to the list. That is the list of the goods where if there is any manufacturer of these goods, then they cannot opt for composition scheme. And what are the 4 points which are added newly to this list, my dear friends? Number 1, fly ash bricks, fly ash aggregate with 90% or more fly ash content, fly ash blocks. Then what is the second point? Bricks of fossil meals or similar siliceous earths. What is number 3, my dear friends? Building bricks. Number 4, earthen or roofing tiles. Now, my dear friends, there is an interesting amendment which has come up in 2022. That is, in the first point where we had fly ash bricks, fly ash aggregate with 90% or more fly ash content and fly ash blocks. In that language, they removed the words 90% or more fly ash content. That means in simple terms, now the first point is fly ash bricks, fly ash aggregate, fly ash blocks. This is now covered in the first point. That means they removed that language called 90% or more fly ash content. That words have now been removed by virtue of amendment made in 2022. So what is the point now, my dear friends? For the first point, fly ash bricks, fly ash aggregate, fly ash blocks. Second one, bricks of fossil meals or similar siliceous earths. Third one, building bricks. Fourth one, earthen or roofing tiles. That's it. So what is the amendment now done is that in the first point they removed that words 90% or more fly ash content. That language has now been removed. So first point is simple point now, fly ash bricks, fly ash aggregate, fly ash blocks. That's it. Next amendment is in charge of GST chapter in video number 6, 93 RCM for goods transport agency. At the end of the video, we'll record the amendment what I'll record now. Thank you. For both inter as well as final. Now, my dear friends, we have spent a lot of time on the discussion about the taxability of GTA service, that is goods transport agency, where we discussed nutshell, that is generally it is covered under reverse charge mechanism where receiver is liable to pay GST. That story will come only when 5% is opted by supplier. But if supplier opts for 12%, then supplier is liable to pay GST. Correct? That's what we just discussed in nutshell. But let me tell you, my dear friends, one interesting amendment has been done with effect from 18th July 2022, where they have specified very clearly that in case of service by GTA by way of transportation of goods to the specified list of persons, what we already know, that is generally covered under RCM itself. That means they have not specified that when GTA does not go for 12%, all that words they remove now. Now they have specified that service by GTA by way of transportation of goods to specified list of persons is covered under RCM only. However, GTA may take registration on their own and they themselves can opt to pay tax under forward charge. And if they opt to pay tax under forward charge, they must issue an invoice and charge the applicable rate of GST and also make a declaration on the invoice stating that we are charging so and so GST on forward charge and we will only pay GST to the government. That declaration should be made by the GTA on the invoice and they should charge GST at the applicable rate. They did not specify in the law now 12% and all, so that government can notify in the future whatever rate they want to apply. That means in simple terms what they have done now from 18 July 2022 is that, simple way I'll tell, services by GTA to the specified list of persons is covered under RCM only. However, GTA may opt to pay tax under forward charge, and if they want to pay tax under forward charge, they must take registration and number 2, they must issue an invoice charging applicable rate of GST and make a declaration on the invoice that they will only pay tax to the government. So they have done something like services by author. Author also we have same kind of concept. We remember this concept, no, my dear friends? Author, same kind of language is there where author can choose to pay tax under forward charge. Author to publisher, author can choose to pay tax under forward charge, he can make declaration on the invoice. Same thing is brought even in case of GTA. That means in simple terms, they removed that concept of 12%, 5% in the law. Now they simply told service by GTA by way of transportation of goods to specified list of persons is taxable under RCM only. However, GTA can choose or opt to pay tax under forward charge. If they opt to pay under forward charge, they must take registration, they must issue an invoice, they must charge applicable rate of GST and also make a declaration on the invoice. That is what GTA is supposed to do if they want to go for forward charge. This is the interesting amendment done in relation to GTA service with effect from 18th July 2022. Chapter number 3, Charge of GST, video number 17, section 9.3, RCM Central Government Post Office Service. At the end of the video, we will include the amendment what I will record now for both inter and final. Friends, so much of time we have spent on the second point, my dear friends, with respect to service by Department of Post by way of speed post, express parcel post, life insurance and agency services provided to a person other than central government, state government, local authority. Now, my dear friends, let me tell you an interesting point and make your life more simple. That is, with effect from 18th July 2022, they made amendment to this point and they replaced the second point, so big point, service by Department of Post by way of speed post, express parcel post, life insurance and agency service. All this point we discussed in the second point. Correct, my dear friends? Now they simply modified this second point and removed that language of speed post, express parcel post, life insurance and agency services. That means in simple terms, now what they have done very clearly is that in case of services by central government, state government, union territory, local authority to a business entity, it is covered under RCM except the following 4 points. Number 1, renting of immovable property, that we will talk separately. Number 2, what is number 2? Service by Department of Post. Number 3, service in relation to aircraft or vessel inside or outside the presence of a port or an airport. Number 4, transportation of goods or passengers. So except these 4 points, rest all cases are covered under RCM. So second point was what? Service by Department of Post by way of speed post, express parcel post, life insurance and agency services. All that words are now been removed. And simple language they have done is service by Department of Post. That's it. That means for every service by Department of Post, provisions of RCM will not apply. Charge of GST chapter, video number 19, section 9.3 other services. At the end of the video, we will record the amendment what I will record now for both inter as well as final. One more interesting point incorporated in section 9.3, my dear friends, with effect from 18 July 2022. In fact, this is a very interesting and new point actually. We all know the concept, that is, in exemptions we learn in detail again, that is, service by way of renting of residential dwelling for residential purpose is exempt under GST. That means if a residential house is given on rent for residential purpose, then it is exempt under GST. But now the point to be noted is that there is an interesting new point which has come up in RCM list, that is, service by way of renting of residential dwelling to a registered person is covered under RCM. That means, imagine a case like this. There is one person, Mr. Anand, he has a residential house with him. This residential house, he has given it on rent to Coca-Cola company for storage of their cool drink bottles. That means basically, Mr. Anand has given his residential house on rent to a registered person. This transaction shall be taxable, and moreover, this is taxable under a reverse charge mechanism. That means the receiver, that is Coca-Cola, is liable to pay GST under RCM. So the new point that is inserted with effect from 18 July 2022 is that service by way of renting of residential dwelling to a registered person is taxable under a reverse charge mechanism. Chapter 3, Charge of GST, video number 19, section 9.3 other services, at 3 minutes 13 seconds. At 3 minutes 13 seconds, one point to be included for both inter and final. In relation to this RCM concept with respect to renting of motor vehicle for transportation of passenger by a non-body corporate to a body corporate, which is covered under RCM, my dear friends, there is an interesting clarification which has been given by virtue of circular number 177 dated 3rd August 2022, where they have clearly clarified that provisions of RCM will come into picture only for service by way of renting of motor vehicle for transportation of passengers. But RCM provisions will not apply for passenger transportation service. There is a clear-cut distinction between renting of motor vehicle and the service of transportation of passenger. Both are very much different. In case of motor vehicle given on rent, motor vehicle is completely at the disposal of the receiver. He can decide what time to go, what time to come, where to go, where not to go. But passenger transportation service is altogether different service. So they have clearly clarified that provisions of RCM will apply only for service by way of renting of motor vehicle designed to carry passenger. But RCM will not apply for passenger transportation service. RCM provision is specifically only and only for service by way of renting of motor vehicle which is designed to carry passengers. This is an interesting clarification which is given by virtue of circular number 177 dated 3rd August 2022. A very interesting point. Friends, we just discussed that there are 4 new goods which are added to the list, that is the list of the goods where if there is any manufacturer of these goods, then they cannot opt for composition scheme. And what are the 4 points which are added newly to this list, my dear friends? Number 1, fly ash bricks, fly ash aggregate with 90% or more fly ash content, fly ash blocks. Then what is the second point? Bricks of fossil meals or similar siliceous earths. What is number 3, my dear friends? Building bricks. Number 4, earthen or roofing tiles. Now, my dear friends, there is an interesting amendment which has come up in 2022. That is, in the first point where we had fly ash bricks, fly ash aggregate with 90% or more fly ash content and fly ash blocks. In that language, they removed the words 90% or more fly ash content. That means in simple terms, now the first point is fly ash bricks, fly ash aggregate, fly ash blocks. This is now covered in the first point. That means they removed that language called 90% or more fly ash content. That words have now been removed by virtue of amendment made in 2022. So what is the point now, my dear friends? For the first point, fly ash bricks, fly ash aggregate, fly ash blocks. Second one, bricks of fossil meals or similar siliceous earths. Third one, building bricks. Fourth one, earthen or roofing tiles. That's it. So what is the amendment now done is that in the first point they removed that words 90% or more fly ash content. That language has now been removed. So first point is simple point now, fly ash bricks, fly ash aggregate, fly ash blocks. That's it. Now my dear friends, we have spent a lot of time on the discussion about the taxability of GTA service, that is Goods Transport Agency, where we discussed nutshell, that is generally it is covered under reverse charge mechanism where receiver is liable to pay GST. That story will come only when 5% is opted by supplier. But if supplier opts for 12%, then supplier is liable to pay GST. Correct? That's what we just discussed in nutshell. But let me tell you my dear friends, one interesting amendment has been done with effect from 18th July 2022, where they have specified very clearly that in case of service by GTA by way of transportation of goods to the specified list of persons, what we already know, that is generally covered under RCM itself. That means they have not specified that when GTA does not go for 12%, all that words they remove now. Now they have specified that service by GTA by way of transportation of goods to specified list of persons is covered under RCM only. However, GTA may take registration on their own and they themselves can opt to pay tax under forward charge. And if they opt to pay tax under forward charge, they must issue an invoice and charge the applicable rate of GST and also make a declaration on the invoice stating that we are charging so and so GST on forward charge and we will only pay GST to the government. That declaration should be made by the GTA on the invoice and they should charge GST at the applicable rate. They did not specify in the law now 12% and all, so that government can notify in the future whatever rate they want to apply. That means in simple terms what they have done now from 18 July 2022 is that, simply I'll tell, services by GTA to the specified list of persons is covered under RCM only. However, GTA may opt to pay tax under forward charge, and if they want to pay tax under forward charge, they must take registration and number 2, they must issue an invoice charging applicable rate of GST and make a declaration on the invoice that they will only pay tax to the government. So they have done something like services by author. Author also we have same kind of concept. We remember this concept no my dear friends. Author, same kind of language is there where author can choose to pay tax under forward charge. Author to publisher, author can choose to pay tax under forward charge, he can make declaration on the invoice. Same thing is brought even in case of GTA. That means in simple terms, they removed that concept of 12%, 5% in the law. Now they simply told service by GTA by way of transportation of goods to specified list of persons is taxable under RCM only. However, GTA can choose or opt to pay tax under forward charge. If they opt to pay under forward charge, they must take registration, they must issue an invoice, they must charge applicable rate of GST and also make a declaration on the invoice. That is what GTA is supposed to do if they want to go for forward charge. This is the interesting amendment done in relation to GTA service with effect from 18th July 2022. Friends, so much of time we have spent on the second point my dear friends with respect to service by Department of Post by way of speed post, express parcel post, life insurance and agency services provided to a person other than central government, state government, local authority. Now my dear friends, let me tell you an interesting point and make your life more simple. That is, with effect from 18th July 2022, they made amendment to this point and they replaced the second point, so big point, service by Department of Post by way of speed post, express parcel post, life insurance and agency service. All these points we discussed in the second point. Correct my dear friends? Now they simply modified this second point and removed that language of speed post, express parcel post, life insurance and agency services. That means in simple terms, now what they have done very clearly is that in case of services by central government, state government, union territory, local authority to a business entity, it is covered under RCM except the following 4 points. Number 1, renting of immovable property, that we'll talk separately. Number 2, what is number 2? Service by Department of Post. Number 3, service in relation to aircraft or vessel inside or outside the presence of a port or an airport. Number 4, transportation of goods or passengers. So except these 4 points, rest all cases are covered under RCM. So second point was what? Service by Department of Post by way of speed post, express parcel post, life insurance, agency services. All that words have now been removed. And simple language they have done is service by Department of Post. That's it. That means for every service by Department of Post, provisions of RCM will not apply. One more interesting point incorporated in section 9.3, my dear friends, with effect from 18 July 2022. In fact, this is a very interesting and new point actually. We all know the concept, that is, in exemptions we learn in detail again, that is, service by way of renting of residential dwelling for residential purpose is exempt under GST. That means if a residential house is given on rent for residential purpose, then it is exempt under GST. But now the point to be noted is that there is an interesting new point which has come up in RCM list, that is, service by way of renting of residential dwelling to a registered person is covered under RCM. That means, imagine a case like this. There is one person, Mr. Anand. He has a residential house with him. This residential house, he has given it on rent to Coca-Cola company for storage of their cool drink bottles. That means basically, Mr. Anand has given his residential house on rent to a registered person. This transaction shall be taxable, and moreover, this is taxable under a reverse charge mechanism. That means the receiver, that is Coca-Cola, is liable to pay GST under RCM. So the new point that is inserted with effect from 18 July 2022 is that service by way of renting of residential dwelling to a registered person is taxable under a reverse charge mechanism. In relation to this RCM concept, with respect to renting of motor vehicle for transportation of passenger by a non-body corporate to a body corporate, which is covered under RCM, my dear friends, there is an interesting clarification which has been given by virtue of circular number 177 dated 3rd August 2022, where they have clearly clarified that provisions of RCM will come into picture only for service by way of renting of motor vehicle for transportation of passengers. But RCM provisions will not apply for passenger transportation service. There is a clear-cut distinction between renting of motor vehicle and the service of transportation of passenger. Both are very much different. In case of motor vehicle given on rent, motor vehicle is completely at the disposal of the receiver. He can decide what time to go, what time to come, where to go, where not to go. But passenger transportation service is altogether different service. So they have clearly clarified that provisions of RCM will apply only for service by way of renting of motor vehicle designed to carry passenger. But RCM will not apply for passenger transportation service. RCM provision is specifically only and only for service by way of renting of motor vehicle which is designed to carry passengers. This is an interesting clarification which is given by virtue of circular number 177 dated 3rd August 2022. A very interesting point. So my dear friends, we are just done with one interesting concept, that is services provided by central government, state government or union territory except the following shall be exempt. What are the following we discussed there? The following: number 1 was service by Department of Post by way of speed post, express parcel post, life insurance and agency services. What is number 2? Service in relation to aircraft or vessel. Number 3, transportation of goods or passenger. Number 4, any other service to a business entity. And we know that any other service to business entity is covered under a reverse charge mechanism. Now my dear friends, let me tell you one very interesting point. With respect to Department of Post, we discussed that services by Department of Post by way of speed post, express parcel post, life insurance and agency services. That means only speed post, express parcel post, life insurance and agency services. These 4 were only taxable. That means other services by Department of Post was exempt. But my dear friends, let me tell you one very interesting latest amendment with effect from 18th July 2022, where they removed that words speed post, express parcel post, life insurance and agency services. That means in simple terms, every service by Department of Post shall be taxable. Earlier, what was taxable was only services by Department of Post by way of speed post, express parcel post, life insurance and agency services. Now they have removed that words speed post, express parcel post, life insurance and agency services. That means in nutshell, every service by Department of Post shall be taxable. This is one very, very interesting and important amendment which has come up with effect from 18th July 2022. Similar point we discussed already under a reverse charge mechanism concept also. Similar to the amendment in the previous exemption point, even in this exemption point also, with effect from 18th July 2022, in case of Department of Post, they removed that language of speed post, express parcel post, life insurance and agency services. That means in simple terms, every service by Department of Post shall become taxable. Similar to the amendment in the previous point. Getting clarity, my dear friends? Exactly. And the story does not end here. Even in this particular exemption point, which is talking about value of service does not exceed 5,000, but this does not apply to Department of Post by way of speed post, express parcel post, life insurance and agency services. With effect from 18th July 2022, they removed that language of speed post, express parcel post, life insurance and agency services. So in simple language, every service by Department of Post will now be taxable with effect from 18th July 2022. Accordingly, wherever related exemption points are there, they made amendment like that, where not just speed post, express parcel post, life insurance and agency service, every service by Department of Post will now become taxable with effect from 18th July 2022. And now, with effect from 18 July 2022, in case of Department of Post, they removed that language of speed post, express parcel post, life insurance and agency services. That means every service by Department of Post will now be taxable with effect from 18th July 2022. So my dear friends, please do keep in mind that with effect from 18th July 2022, wherever there is a point related to Department of Post, where they specifically told that Department of Post by way of speed post, express parcel post, life insurance and agency services, now they removed that language of speed post, express parcel post, life insurance and agency services. That means in nutshell, every service by Department of Post will now be taxable. Not just only speed post, express parcel post, life insurance and agency services. Earlier, only those four were taxable, but with effect from 18 July 2022, every service by Department of Post is taxable. So my dear friends, we are just done with one very, very interesting exemption point, that is exemption number 12. That is, if a residential dwelling is given for use as a residence, then it is exempt. And we also discussed that if residential is given for commercial, commercial given for residential, commercial given for commercial, then it is clearly taxable. Exemption is only when a residential dwelling is given on rent for use as residence. But let me tell you one interesting point. With effect from 18th July 2022, there is one very interesting amendment which has been brought in this. That is, services by way of renting of residential dwelling for use as residence is exempt. However, it shall become taxable if it is given on rent to a registered person. So in simple language, services by way of renting of residential dwelling for use as residence is exempt except when it is rented out to a registered person. And moreover, my dear friends, already we discussed a new point in reverse charge mechanism. If a person is giving a residential dwelling on rent to a registered person, then receiver is liable to pay tax under RCM. So continuing the same example what we just discussed, if Shivateja is given a property on rent to Raviteja for residential purpose only, and Raviteja is not a registered person, then GST will not apply. But if Raviteja is a registered person, then GST will apply. And moreover, Raviteja is required to pay tax under reverse charge mechanism. This is an interesting amendment which has come up with effect from 18th July 2022. Now, my dear friends, let me tell you one interesting amendment which has come up in 2022, very much relevant for exam. That is, in the first point, where we were talking about transportation of passenger by air embarking from or terminating at a specified locations of Manipur, Mizoram, Nagaland, Tripura, all these locations we discussed. But in 2022, an interesting amendment has been done in the first point where they added the word transportation of passengers by air in economy class. So that means if Shivateja is traveling from Hyderabad to Sikkim, the flight ticket, on that flight ticket cost, GST will not apply if I travel through economy class ticket. However, if I travel through business class ticket, then definitely it will become taxable. That means they added the words economy class in order to restrict the exemption for transportation of passenger by air embarking from or terminating at the specified stage. Exemption is only when the journey is performed through economy class. A very, very new point added apart from the latest amendment what we just discussed some time back. That is for B point and C point, exemption will not apply if the service is provided through e-commerce operator. So the two interesting amendments to be kept in mind is that second point, third point, that is non-air conditioned contract carriage, stage carriage, this exemption will not apply if it is supplied through e-commerce operator. Second interesting amendment is that in first point, air embarking from or terminating it, for that point specified stage, exemption will apply only if journey is performed through economy class ticket. If it is performed through business class ticket or any other ticket, then it becomes taxable. Exemption is only in economy class airfare. With this particular point, my dear friends, we have clearly understood in case of services by way of transportation of goods by rail or vessel, with respect to the following list of goods, what we just discussed, it is exempt. And in all this list of goods, my dear friends, with effect from 18th July 2022, the fourth one has been deleted. That is railway equipments or materials. That means henceforth, with effect from 18th July 2022, there is no exemption given in case of transportation of goods by rail or vessel in relation to railway equipments or materials. So now transportation of railway equipments or materials through rail or vessel shall become taxable with effect from 18th July 2022. Friends, in this particular point where we have been talking about services by way of storage or warehousing of all these products is exempt, my dear students, let me tell you one interesting point. With effect from 18th July 2022, all these list of goods have been removed except cereals, pulses and fruits. That's it. Rest all things like fruit and nuts, all your what you call indigo, betel leaves, tendu leaves, all these goods list have been removed. Now, exemption of this particular point in relation to warehousing or storage is restricted only and only to cereals, pulses and fruits. That's it. Service by way of storage or warehousing of cereals, pulses and fruits is exempt. Any other goods will become taxable. This is an interesting amendment which has come up with effect from 18th July 2022. So my dear students, in this list of exemption what we just discussed related to agriculture related activities, we discussed what are all the agriculture and allied activities which are exempt. In this context, there is also point number H which talks about services by way of fumigation in a warehouse of agricultural produce. Fumigation is something like adding some smoke so that any insects or any other kind of mosquitoes will just vanish away. So service by way of fumigation in a warehouse of agricultural produce is exempt. But this particular point, that is point number H, which talks about fumigation, has been removed with effect from 18th July 2022. So with effect from 18th July 2022, service by way of fumigation in a warehouse of agricultural produce shall become taxable. In the context of healthcare service, my dear students, we discussed that healthcare service by a clinical establishment or an authorized medical practitioner or paramedics is exempt. But let me tell you one interesting amendment which has come up with effect from 18th July 2022. In fact, that was a date when government has drastically done changes to exemptions point. That is where a lot of places you have been seeing 18 July 2022. Now what is the new point they have added? With effect from 18 July 2022, they have specified that in case of services by clinical establishment by way of providing rooms to a patient where the room rent of that particular room is more than 5,000 per day, then in that scenario, GST will apply. That means, in simple terms, if there is a patient who has gone to the hospital for a particular treatment and he has got admitted into the hospital, that means inpatient. When he got admitted to the hospital, he has taken one luxurious suite room in the hospital and the room rent for that suite room is 7,000 per day. In that case, my dear friends, GST will apply. GST will apply if the room rent or the charges per day of that room is more than 5,000 per day, then it is taxable. However, the story of 5,000 will not apply in case of ICU, CCU, NICU, that means intensive care unit, critical care unit, intensive critical care unit, or neonatal intensive care unit. In those scenarios, GST will not apply. But other than the ICU, NICU cases, if there is a room rent which is being charged by the hospital and the room rent is more than 5,000 per day, then it becomes taxable and GST will apply. Ultimately, government intention looks very clear that they want to give exemption for hospital treatment only when it is a normal room and all. But if somebody is taking a suite room, that means the person is wealthy enough to pay GST, let's charge GST. That's the whole idea with which government is operating. So I hope you got the logic here, my dear friends. So in case of service by way of providing rooms by clinical establishment where the room charges or rent is more than 5,000 per day, then GST will apply. But this concept of 5,000 per day room rent will not apply to ICU, NICU, ICCU or critical care unit. That's an interesting amendment which has come with effect from 18 July 2022. High possibility that a question may trigger in the exam. This particular point, what we just discussed, is completely modified with effect from 18 July 2022, where they have specified the revised language like this. Services by way of training or coaching in point number 1, recreational activities relating to arts or culture by an individual, or point number 2, sports by charitable entities registered under section 12AA or 12AB of Income Tax Act. Earlier the language was different. Earlier the simple language was arts, culture or sports by charitable institutions. But now the language what they changed is services by way of training or coaching in point number 1, recreational activities relating to arts or culture by an individual, or point number 2, sports by charitable institutions or entities registered under section 12AA or 12AB. This amendment has been made with effect from 18th July 2022. My dear students, I have spent 2 minutes of time with you guys on discussion about services by way of accommodation in a hotel or guest house where the room rent is exactly up to 1,000 or less than 1,000 per day, then it is exempt. But let me tell you one very interesting point now. That is, with effect from 18th July 2022, this exemption has been removed. That means, with effect from 18th July 2022, even though the hotel room rent is less than 1,000 rupees, still it is taxable. In fact, we didn't want to remove that point from your course. The reason being, you have to understand the point what was there before, what is amended now. So with effect from 18 July 2022, even though the room tariff for the hotel is less than 1,000, still it becomes taxable with effect from 18 July 2022. Very, very important amendment to be kept in mind. That is why we have kept in the course old point as well as the amended point for your better clarification and understanding. My dear students, we just spoke about entry number 47A, which deals with the concept of services given by FSSAI department to food business operator, which was actually exempt. But one interesting point, let me tell you, that is, with effect from 18th July 2022, this amendment has been withdrawn. That means, henceforth, from 18th July 2022, services given by FSSAI by way of license given to food business operator shall now become taxable with effect from 18th July 2022. My dear students, let me tell you one interesting amendment here with respect to entry number 56, which was talking about service by way of slaughtering of animals. This is actually exempt. However, with effect from 18th July 2022, this exemption has been withdrawn. Withdrawn means it has become taxable. So henceforth, with effect from 18th July 2022, service by way of slaughtering of animals shall be taxable. An important amendment, high possibility that question may come in the exam. So please keep that in mind, my dear friends. Friends, let me tell you one interesting amendment which has been made with effect from 18th July 2022. That is your entry number 75 exemption, which deals with the concept of services provided by operators of common biomedical waste treatment facility to clinical establishment. That service which was actually exempt has been withdrawn with effect from 18th July 2022. That means services which is provided by operators of common biomedical waste treatment facility by way of treatment of that biomedical waste is taxable with effect from 18th July 2022. Very interesting and important amendment. So from 18th July 2022, this is now taxable. Yes, my dear students. So we have discussed about the concept of healthcare services. In this context, let me tell you an interesting point. That is, with effect from 18th July 2022, one interesting amendment has been done. That is, services provided by cord blood banks by way of preservation of stem cells or any other service in relation to such preservation has been made taxable. That means, with effect from 18th July 2022, this particular service is taxable. Now, my dear friends, we are done with discussion about various interesting exemptions which are given under GST law with regard to various services which have been exempt under GST. That means they are those services which are actually taxable, but currently exemption is being given by way of exemption notification. In this, my dear friends, two more interesting points have been added in 2022. What are those two more interesting exemptions? Let's discuss that also. First interesting point. We discussed one point very clearly that with earlier services by Department of Post by way of speed post, express parcel post, life insurance and agency service have been taxable. But later on what they have done is they removed that language of speed post, express parcel post, life insurance and agency service. That means we interpreted very clearly that any service by Department of Post is taxable. Now, in order to counter that point, they have introduced a specific exemption point in the exemption list, where they have specified that services by Department of Post by way of postcard, inland letter, book post and ordinary post. Come on, my dear friends, what did I say? Services by Department of Post by way of postcard, inland letter, book post and ordinary post, envelopes weighing less than 10 grams. For this particular cases, a specific exemption is introduced by way of introducing a specific point to the exemption list. So what are exempt, my dear friends? Services by Department of Post by way of postcard, inland letter, book post and ordinary post, envelopes weighing less than 10 grams. In that case, that service given by Department of Post shall be exempt. So it is to be noted that any other service by Department of Post shall be taxable. Exemption is limited only to the extent of service by Department of Post by way of postcard, inland letter, book post and ordinary post, envelopes weighing less than 10 grams. Only that much is exempt. Any other service by Department of Post shall definitely become taxable. Next interesting exemption, my dear friends, that is tour operator service provided to a foreign tourist which is performed partly in India and partly outside India. This is also exempt, but this is subject to some condition. That is, exemption is limited to the extent of proportion of tour which is performed outside India or 50% of total consideration, whichever is less. Now what does that mean? Let's take a small example like this. Let us say there is one person, Mr. X, who is a tour operator. He is giving service to one person, Mr. Mike, and the tour is in India as well as outside India. Let's say the tour is for India and Sri Lanka, and the total tour package value is 1 lakh rupees, and the number of days in India is 2 days and number of days in Sri Lanka is 3 days. So basically, how much extent is performed outside India? How much extent performed outside India is basically 3 by 5, because 2 days in India, 3 days in Nepal. So 3 by 5 of 1 lakh will work out to 60,000, or 50% of total consideration. That is 50% of 1 lakh, which comes to 50,000. So 60,000 or 50,000, whichever is lower, shall be exempt. So let's take one more interesting example. Let us say for a second, the tour is for 3 days in India, 2 days in Sri Lanka. So how many days in Sri Lanka? 2 days out of 5 days tour. That means 2 by 5 is the number of days outside India. Assume for a second the package value is 1 lakh. 1 lakh into 2 by 5 comes out to 40,000. And 50% of 1 lakh comes to 50,000. In that case, the exemption will be 40,000 or 50,000, whichever is lower, which works out to 40,000. So basically, we are talking about services. That is a tour operator service provided to a foreign tourist, partly in India, partly outside India. And exemption is given to the extent of proportionate value related to number of days outside India, or 50% of total consideration, whichever is lower. And moreover, I am sure we already know this concept. Foreign tourist is somebody who comes to India for a stay of not more than 6 months for a legitimate non-immigrant purpose. Means is coming to India legally, not for the purpose of shifting, but for the purpose of a tour. Foreign tourist means a person who comes to India for a stay of not more than 6 months for a legitimate non-immigrant purpose. So this is one more new interesting exemption point which has been added to the exemption list. And my dear friends, let me tell you one interesting point here. With respect to this last point what we just discussed, one more point let me add on for you. That is, when we talk about duration of stay in India and outside India, exemption is restricted to the extent the duration of stay is outside India. In that case, you also have to understand that what if part of the day is in India, part of the day is outside India. For that purpose, they have specified that if the duration of stay is equal to or exceeding 12 hours, then it is considered as full day. And if it is less than 12 hours, it is considered as half day. This clarification also they have given for the purpose of making calculation related to the exemption. Friends, we are done with discussion about a lot of interesting exemptions which are there in our list. In fact, they keep changing time in and time out, but very, very practical from examination standpoint and also from a practical standpoint. Now, my dear friends, it's time to discuss some interesting clarifications which are given by way of circulars, which are related to these exemption points. Let's look at them now. First point, clarification regarding applicability of GST on supply of food in Anganwadis and schools. We already discussed this point in exemption list related to educational institution, where we spoke about catering service, including any midday meal program which is given to preschool and schools, and that could be sponsored by the government or could be sponsored by corporates. See now, the issue which arose for consideration was to whether serving of food in schools under a midday meal scheme would be exempt if the supplies are funded by government grants or corporate donations. Entry number 66B exempts service provided to an institution by way of catering, including any midday meals sponsored by the central government, state government, union territory. And this entry applies to preschool as well as schools. We know that already. Education up to higher secondary school and equivalent. Now, accordingly, as per the said entry, catering service provided to an education institution is exempt from GST and it includes midday meal service also. And the scope of this entry is thus wide enough to cover serving of food, any food to a school including preschool. In fact, an Anganwadi is a kind of preschool only actually. Inter provides preschool non-formal education. Hence, Anganwadi is covered by the definition of education institution as a preschool. Further, it is clarified that services provided to education institution by way of serving of food, that is catering including any midday meals, is exempt from levy of GST irrespective of its funding from government grants or corporate donations. Irrespective of whether it is funded by the government grants or by corporate donations, it is still exempt. Hence, serving of food to Anganwadi shall also be covered by said exemption whether sponsored by the government or through donation from corporates. This has been clarified by virtue of circular number 149 by 5 by 2021 GST dated 17th June 2021. This is an interesting clarification which has been given. So by this clarification, what you have understood very clearly is that catering service provided to Anganwadi is also exempt because they are also like a preschool. And moreover, the funding could come from the government grants or from corporate donations. It is still exempt. This is a very interesting clarification related to catering service provided to educational institutions. Friends, next interesting clarification is with respect to the concept of access to road or bridge on payment of toll charges. We know this concept, my dear friends, that we discussed very clearly that whenever we pay toll charges, on that we do not pay GST. That is exempt from GST. In that same context, we also spoke about access to road or bridge on payment of annuity, that is yearly payment, that is also exempt. But in this context, an interesting clarification has been given which we need to look at it. And they have clearly clarified by way of this circular stating that access to road or bridge, that access fee what you pay, that is only exempt, but this exemption will not continue for construction of road activity. Let's see that clarification now. Come on. Clarification regarding applicability of GST on the activity of construction of road, where consideration are received in deferred payment, that is annuity, it's not lump sum. Circular number 150 by 06 by 2021 GST dated 17 June 2021 clarifies the applicability of GST on annuities paid for construction of road, where certain portion of consideration is received upfront, while remaining payment is made through deferred payment, that is annuity, spread over years. It is important to note that entry number 23A exempt access to road or bridge on payment of annuity, but it does not cover construction of road service. This is very important point to be noted. Thus, it has been clarified that entry number 23A does not grant any exemption, that is, does not exempt GST on the annuity or deferred payment paid for construction of roads. This is a very interesting clarification which has been given, because the exemption was only for access to road or bridge on payment of annuity, but not related to construction service, that is construction of road. That activity is taxable. There is no exemption for that particular activity. Come on, my dear students, let's move forward to the next interesting clarification. And I'm sure we guys know this point very clearly that all these clarifications are given by way of circulars. So that's very important to be noted. Let's see the next point now. Come on. Friends, let's look at the clarification in relation to GST with respect to conduct of examination by National Board of Examination. In fact, we know one point very clearly in educational institution point, that is services by way of conduct of examination, by way of collection of examination fee, that service is predominantly exempt. We know this point already, correct, my dear friends? Exactly. See now. Clarification regarding GST on supply of various surveys by central and state board. Circular number 151/07/2021 GST dated 17th June 2021 clarifies the taxability of various services supplied by central and state boards such as National Board of Examination. In fact, they conduct examination by way of collecting entrance fees. These services include entrance examination on charging a fee for admission to education institution, input service for conducting such entrance examination for students, accreditation of education institution or professionals so as to authorize them to provide their respective services. For example, National Board of Examination provides services of conducting entrance examination for admission to courses including Diplomat National Board and Fellow of National Board, prescribes courses and curricula for PG medical studies, holds examinations and grant degrees, diplomas and other academic distinctions. It carries out all functions as are normally carried out by central or state educational boards and is thus a central educational board. Is what, my dear friends? It is a central educational board. Central and state educational boards are treated as educational institution for the limited purpose of providing service by way of conduct of examinations to the students. Therefore, National Board of Examination is an educational institution insofar as it provides services by way of conduct of examination, including any entrance examination to the students. So it is, what is that clarified now? Please see very clearly. It is clarified that GST is exempt on services provided by central or state boards, including the boards such as NBE, by way of conduct of examination for the students, including conduct of entrance examination for admission to the institution. Therefore, GST shall not apply on any fee or amount charged by such boards for conduct of examination, including entrance examination. So that service will clearly be exempt. And moreover, let's see the next interesting point in this. GST is also exempt on input service relating to admission to or conduct of examination, such as online testing service, result publication, printing of notification for examination, admit card, question papers, etc. when provided to such boards under entry number 66B clause 4. In fact, that particular entry talks about services to education institution by way of conduct of online examination or by way of conduct of entrance examination. But GST is applicable to other services provided by such boards, namely of providing accreditation to an institution or to a professional, accreditation fee or registration fee, such as fee for FMGE screening test, so as to authorize them to provide their respective services. So accreditation fee and all will definitely be taxable. Exemption is restricted only and only to service by way of conduct of examination, including entrance examination. That much extent is exempt even though it is conducted by central or state boards, including National Board for Examination. Now let's look at next interesting clarification, my dear students. This related to clarification related to milling of paddy into rice or wheat into wheat flour to the state government. That service is provided under public distribution system, that is PDS. We know the concept of ration shops who are actually providing service to the government by way of distribution of any grains or coarse grains. They are provided to the public and they are actually providing that on behalf of state government, for which they get commission or margin. Now see this clarification. Clarification regarding applicability of GST on milling of wheat into flour or paddy into rice for distribution by state government under public distribution system, that is PDS. The issue which arose for consideration was to whether composite supply of service by way of milling of wheat into wheat flour along with fortification by any person to a state government for distribution of such wheat flour under PDS is eligible for exemption under entry 3A. In fact, 3A talks about composite supply provided to the government where the value of goods is not more than 25% of the total value. In that case, that service is exempt. Provided it is related to a function entrusted to a panchayat or to a municipality. See now, entry 3A exempts composite supply of goods services in which the value of the said goods is not more than 25% of the value of the said composite supply provided to central government, state government, union territory or local authority by way of any activity in relation to function entrusted to a panchayat under Article 243G of the Constitution, or in relation to function entrusted to a municipality under Article 243W of the Constitution. Public distribution specifically figures at the entry number 28 of the 11th schedule to the Constitution, which lists the activity that may be entrusted to a panchayat under Article 243G of the Constitution. That means that is specifically covered under activities entrusted to a panchayat. Hence, said entry 3A would apply to composite supply of milling of wheat and fortification thereof by the miller or of paddy into rice provided that the value of goods supplied in the such composite supply, that is goods used for fortification, packing, etc., does not exceed 25% of the value of the composite supply. And it is important to be noted that it is a matter of fact as to whether the value of the goods in such composite supply is up to 25% and requires ascertainment on case-to-case basis. So the interesting point we have to understand very clearly is that service by way of milling of wheat into wheat flour or paddy into rice done by a person under a public distribution system, and it is provided to central government or state government. They have clarified that the service is exempt because it is covered under entry number 3A, provided such composite supply in that value of the goods is not more than 25%, then only that service is exempt. In fact, this interesting clarification has been given by virtue of circular number 153 by 9 by 2021 GST dated 17th June 2021. Now let's look at the next point, my dear friends. That is next interesting clarification, and all these clarifications are given by way of circular only, and this clarification is related to services given by state government to their undertakings or to any other public sector undertaking by way of guaranteeing the loans taken by them. In fact, for this particular point, there is a specific exemption entry in the exemption list, entry number 34A. Let's see that clarification now. Clarification regarding applicability of GST on service supplied by state government to their undertakings or PSUs by way of guaranteeing loans taken by them. The issue which arose for consideration was regarding applicability of GST on supply of service by state government to their undertakings or PSU by way of guaranteeing loans. Entry 34A exempt service supplied by CG, SG, UT or to their undertakings or public sector undertakings by way of guaranteeing the loans taken by such undertakings or PSU from the banking company and financial institutions. So accordingly, it is reiterated that guaranteeing of loans by central government or state government for their undertaking or PSU is specifically exempt under said entry number 34A. In fact, this point is already there. They have just clarified and reiterated that point. That's all. And this is done by virtue of circular number 154 by 10 by 2021 dated 17th June 2021. Let's look at the next interesting clarification, my dear friends. Let's see that. Come on. Clarification regarding coaching services supplied by coaching institution and NGOs under the central sector scheme of scholarship for students with disability. Free coaching service provided by coaching institutions and NGOs under the central scheme for scholarship for students with disability, where the total expenditure is borne by the government to the coaching institution by way of grant in aid is covered under entry number 72 and hence exempt from GST. In fact, earlier we had a point called service by way of training or coaching, where the total expenditure is meant by central government was exempt. In fact, the total expenditure is actually modified to 75% or more expenditure is met by central government, then it is exempt. So in the same lines, this service is also exempt. This is clarified by way of circular number 164 by 20 by 2021 GST dated 6th October 2021. So it is important to be noted that point very clearly that service by way of training or coaching under any training program where 75% or more of the total expenditure is met by central government, state government or union territory shall be exempt. So in the similar lines, this clarification has also been given. Let's look at the next clarification, my dear friends. In fact, a very interesting and beautiful clarification. Let's see that. In fact, this point talks about toll charges. We know that access to road or bridge on payment of toll charge is exempt from GST. But sometimes what happens is that in case of overloading of vehicles at the toll gate, they collect extra charges. Now they have clarified that for extra charges also GST will not apply because it is like toll charge only. And moreover, we know that when we are crossing through toll gates, there is separate counters for where FASTag is there. And wherever vehicle does not have FASTag, they collect double the amount where the person is paying by way of cash. Now that extra charges is also like toll charges only. So for that also exemption will apply. This interesting clarification has been given. Now let's see the language. Entry number 23 exempts service by way of access to road or bridge on payment of toll charges. With regard to said entry, the following issues have been clarified. Ministry of Road Transport and Highways, that is MORTH, Ministry of Road Transport and Highways, permitted the overloaded vehicles to ply on the national highways after payment of higher toll charges. It has been clarified that overloading charges at toll plazas would get the same treatment as given to toll charges. Next point, MORTH has directed to collect additional amount from the users of the road to the extent of 2 times of the fees applicable to that category of vehicle which is not having a valid functional FASTag. I am sure you would have practically also seen this, where you are going in a vehicle where FASTag is not there and you are going towards the cash counter. They will collect double the amount. Essentially, additional amount is collected from the users of the road not having functional FASTag is in nature of toll charges and should be treated as additional toll charges only. Therefore, it is clarified that additional fee collected in the form of higher toll charges from vehicles not having FASTag is essentially payment of toll for allowing access to road or bridge to such vehicles and may be given the same treatment as given to toll charges. That means it is straight away exempt. A very interesting clarification given with respect to payment of toll charges. So in simple terms, normal toll charge is also exempt, overloading fee paid is also exempt, and in the same lines, if double the amount is paid for by a vehicle which does not have a valid FASTag, even in that case also that extra amount is also exempt because it is as good as additional toll charges. That will also be exempt. Let's look at the next clarification, my dear friends. We have got a lot of interesting clarifications given by virtue of circulars. It is important to understand them. There could be a possibility that one question may trigger in the exam. There could be a possibility, right? So any point is important. A question may come up in the exam on which we can't take any sort of chance. See now, it is not mandate to remember circular number, but it is important to remember the concept. If you understand the concept, you will automatically remember. See the next point. Clarification regarding renting of vehicles to state transport undertaking and local authority. In fact, we know this concept that services by way of giving on hire to state transport undertaking a motor vehicle meant to carry more than 12 passengers, or to a local authority an electrically operated vehicle meant to carry more than 12 passengers, that service is straight away exempt. In fact, in this particular point, they have given a clarification stating that giving on hire and renting of the vehicle is more or less the same. See now. Entry number 22 exempts service by way of giving on hire to a state transport undertaking a motor vehicle meant to carry more than 12 passengers, or to a local authority an electrically operated vehicle meant to carry more than 12 passengers. It is clarified that expression giving on hire includes renting of vehicles. Accordingly, where the said vehicles are rented or given on hire to state transport undertaking or local authority, said services are eligible for above exemption, irrespective of whether such vehicles are run on routes, timings as decided by state transport undertaking or local authorities and under effective control of state transport undertakings or local authorities, which determine the rules of operation or plying of vehicles. An interesting clarification where they have given giving on hire also covers renting of such vehicle, and we are talking about exemption given where a vehicle is given on rent and that vehicle is meant to carry more than 12 passengers to a state transport undertaking, or to local authority an electrically operated vehicle meant to carry more than 12 passengers. This clarification is given by virtue of circular number 164 by 20 by 2021 GST dated 6th October 2021. Now let's look at next clarification, my dear friends. This is related to education institution point, that is, wherever a student joins any school, at the time of joining they might collect some extra fees as a joining fee, or if a student in the middle of the year he wants to shift to another school, then is required to take something like a migration certificate. For that, a school might collect extra charge. Now they have clarified by virtue of this circular stating that extra fees will not attract GST because it is as good as service provided by education institution to its students. See now, clarification regarding applicability of GST on application fee charged for entrance or the fee charged for issuance of eligibility certificate for admission or for issuance of migration certificate by the education institution. The issue which arose for consideration was regarding applicability of GST on application fee charged for entrance or the fee charged for issuance of eligibility certificate for admission, eligibility certificate for admission or for issuance of migration certificate by education institution. In this regard, it is to be stated that educational services supplied by education institutions to its students are exempt from GST while entry number 66 and the relevant portion is as under: service provided by an education institution to its students, faculty and staff, services by education institution by way of conduct of entrance examination against consideration in the form of entrance fee. Therefore, it can be seen that all services supplied by an education institution to its students are exempt from GST. Consideration charged by the institutions by way of entrance fee for conduct of entrance examination is also exempt. So the exemption is wide enough to cover the amount or the fee charged for admission or entrance or the amount charged for application fee for entrance or the fee charged from prospective students for issuance of eligibility certificate to them in the process of their entrance or admission to education institution. Service supplied by education institution by way of issuance of migration certificate to the leaving or ex-students are also covered by exemption. Accordingly, they have clarified that such service of education institution are also exempt. And this interesting concept, my dear friends, has been clarified by virtue of circular number 177 by 09 by 2022 GST dated 3rd August 2022. A very interesting clarification in relation to admission fees or migration fee or any other eligibility certificate. All these kind of services will come under educational service provided by educational institution to its students. Now, my dear friends, let's look at the next interesting clarification, which is in fact related to supply of service related to transit cargo to Nepal and Bhutan. This clarification related to that particular exemption. Let's see that now. Clarification regarding applicability of GST on transportation of empty containers returning from Nepal and Bhutan after delivery of transit cargo to India. In fact, we are talking about returning from Nepal and Bhutan. Actually, the exemption part only talks about service related to the transit cargo to Nepal and Bhutan. This clarification is talking about returning empty containers. The issue which arose for consideration was regarding applicability of GST on transportation of empty containers returning from Nepal and Bhutan to India after delivery of transit cargo. Entry number 9B exempts GST on supply of services associated with the transit cargo to Nepal and Bhutan. In this regard, it is clarified that exemption under entry 9B covers service associated with transit cargo both to and from Nepal and Bhutan. So it is also clarified that movement of empty containers from Nepal and Bhutan after delivery of the goods there is a service associated with the transit cargo to Nepal and Bhutan, and it is therefore covered by exemption. This clarification is given by circular number 179 by 09 by 2022 GST dated 3rd August 2022. In fact, actually the original exemption point talks only about supply of service associated with transit cargo to Nepal and Bhutan. This clarification has been given with respect to empty containers returning. So with this, my dear friends, we have discussed a lot of interesting clarifications, but let me tell you, we have got few more interesting clarification, friends. Let's spend some time, come on, so that we get a great amount of clarity on these concepts now. See the next point. Clarification regarding applicability of GST on sanitation and conservancy services supplied to Army and other central and state government department. In fact, we know the concept already that as per entry 3 and entry 3A, that is services to central government, state government, union territory and all, that exemption is given where it is in relation to function entrusted to a panchayat or to a municipality. In the same lines, composite supply, where the value of the goods is not more than 25% of the said composite supply, that is also exempt. And both are related to a case where it is in relation to function entrusted to a panchayat or municipality, then only it is exempt. Same clarification has been given in this context. Let's see now. Issue which arose for consideration was regarding taxability of sanitation and conservancy services supplied to army and other central and state government department. So what service we are talking about? Sanitation and conservancy services. Municipalities and panchayats and other local authorities such as cantonment boards carry out functions entrusted to them under Article 243W and 243G of the Constitution respectively. Functions that may be entrusted to municipalities and panchayats are listed in Schedule 11 and 12 of the Constitution. Central government, state government, union territory also performs functions listed in Schedule 11 and 12 such as irrigation, public health, etc. And services by central government, state government, union territory or any local authority by way of any activity. Services by, it is not to, by central government, state government, union territory or local authority by way of any activity in relation to function entrusted to a panchayat under Article 243G or to a municipality under Article 243W of the Constitution have been declared as neither a supply of goods nor supply of service. And the exemption 3 and 3A has been given on pure service and composite supplies procured by the government, central government, state government, union territory or local authority for performing functions listed in 11th and 12th schedule of the Constitution. It is clarified that if such services are procured by the Indian Army or any other government, ministry or department which does not perform, what is that language? Which does not perform any function listed in 11th and 12th schedule in the manner as a local authority does for general public, then the same are not eligible for exemption. So if it is performing activities or function listed in 11th and 12th schedule, then only exemption is being given. And this point has been clarified by way of circular number 177 by 09 by 2022 dated 3rd August 2022. An interesting clarification in relation to sanitation and conservancy services provided to army or a department of central and state government. So if they are doing that activity which is entrusted to panchayat or municipality, then exemption is being given. If not, it becomes taxable. Now let's look at the next interesting clarification, my dear friends. In fact, I love this point a lot actually, because a very, very interesting clarification which was the need of the hour, a very interesting point. In fact, we know one exemption point, that is service by way of transportation of goods by road except services of GTA is actually exempt. That means if any person is giving service by way of transportation of goods by road, that is exempt. So what is exempt is only service of transportation of goods by road. But here one interesting activity is being done. Let's look at that. Clarification regarding applicability of GST on transport of minerals from mining pit head to railway siding, beneficiation plant, etc. by vehicles deployed with a driver for a specific duration of time. In fact, this is as good as renting of a vehicle, not service of transportation of goods. See that point clarification now. Very interesting clarification. Exemption is only for service of transportation of goods by road, not for renting of vehicle. See now. The issue which arose for consideration was whether transport of minerals within the mining area, say from mining pit head to railway siding or beneficiation plant, etc., by vehicles deployed with a driver for a specific duration of time would be covered under entry 18, which exempts transportation of goods by road except by GTA. Now see the clarification. Usually in such cases, vehicles such as dumpers, tippers, loaders, trucks are given on hire to the mining lease operator. Expenses for fuel are generally borne by recipient of service. The vehicle with the driver are at disposal of the mining lease operator. That means as good as vehicle is given on rent for transport of minerals within the mine area, that is mining pit to railway siding or beneficiation plant, etc., as per his requirement during the period of contract. Such services are nothing but rental services of transport vehicle with operator, that is with the driver. The person who takes the vehicle on rent defines how and when the vehicles will be operated, determines schedules, routes and other operational consideration. The person who gives the vehicle on rent with operator, this line is interesting. The person who gives the vehicles on rent with operator cannot be said to be supplying the service of transportation of goods. Accordingly, it is clarified that such renting of trucks and other freight vehicles with the driver for a period of time is a service of renting of transport vehicle with operator, but not service of transportation of goods by road. Consequently, it is not eligible for exemption under entry number 18, and this is clarified by circular 177/09/2022, same circular we have been seeing so many times, dated 3rd August 2022. A very interesting point, my dear friends. Friends, now let's look at the next interesting clarification. See that now. Location charges or preferential location charges collected in addition to the lease premium for long-term lease of land constitute a part of lease premium or of upfront amount charged for long-term lease of land and thus exempted. In fact, my dear friends, we know this point already. Upfront amount charged for leasing of long-term leasing of lands for industrial development, that service is exempt. In fact, they have clarified in this context that apart from the lease charges, any other location charges or preferential location charges collected, that is also exempt. Something like any center plot, north facing plot, northeast plot, some specific plot is being given or a corner plot, for that they have taken extra charges, that will also be exempt. See now. The issue which arose for consideration was whether location charge or preferential location charges collected in addition to lease premium for long-term lease of land constitute a part of lease premium or upfront amount charged for long-term lease of land and are eligible for same tax treatment. As per entry number 41, upfront amount called as premium, salami, cost price, development charge or by any other name payable in respect of service by way of granting of long-term lease, that is 30 years or more, of industrial plots. Of what plot, my dear friends? Industrial plots or plots for a development of infrastructure or for financial business provided by state government, industrial development corporation or undertaking or by any other entity having 20% or more ownership of the central government, state government, union territory to the industrial units or the developers in any industrial or financial business area is exempt from GST. In fact, this point already we discussed in the exemption list. Allowing choice of location of plot is an integral part of supply of long-term lease of plot, and therefore location charge is nothing but a part of consideration charge for long-term lease of plot, being charged upfront along with upfront amount for the lease, the same is exempt. Accordingly, it is clarified that location charges or preferential location charges paid upfront in addition to the lease premium for long-term lease of land constitute a part of upfront amount charge for long-term lease of land and are eligible for exemption under same tax treatment and exemption under entry number 41, and circular number is same which has clarified this. 177/09/2022 GST dated 3rd August 2022. Next point, my dear friends, we all know an interesting TV program known as Big Boss. Could be whichever regional language you are watching it out. In a lot of different languages, we have this show known as Big Boss. In Big Boss, there is a guest anchor who comes weekly only once and works as an anchor for that particular TV show, and he is paid honorarium for representing in that TV show. Now, this honorarium which is paid to the guest anchor is also taxable. There is no specific exemption given anywhere, and moreover, we know the point that they are taxable and were required to pay GST and take registration if their aggregate turnover is more than 20 lakh or 10 lakhs in special category states. See the clarification now, come on. Clarification regarding GST on payment of honorarium to guest anchors. The circular clarifies the applicability of GST on honorarium paid to guest anchors. Sansad TV and other TV channels invite guest anchors to participate in their shows and pay remuneration to them in the form of honorarium. It is clarified that supply of all goods services are taxable unless exempt, or they are declared as neither a supply of goods nor supply of service. That means everything is taxable. Services provided by the guest anchors in lieu of honorarium attract GST liability. However, guest anchors whose aggregate turnover in a financial year does not exceed 20 lakh or 10 lakh shall not be liable to take registration and pay the GST. And this point is also clarified by same circular number 177 by 09 by 2022 dated 3rd August 2022. Next point, my dear friends. Now, my dear students, let's look at one interesting clarification given with respect to healthcare services, where they have clearly clarified that special kind of services such as assisted reproductive technology or in vitro fertilization, that is IVF, where there is a concept of test tube baby, that kind of specialized services given by the hospital are also covered under healthcare services only, and they are also regarded as exempt, is what they have clarified. Let's see that point now, come on. Clarification regarding applicability of GST on service in the form of ART or IVF. Issue which arose for consideration was whether GST is applicable on services by way of assisted reproductive technology procedures such as in vitro fertilization. Healthcare service provided by a clinical establishment, an authorized medical practitioner or paramedics are exempt wide entry number 74. As per definition of healthcare services, it means any service by way of diagnosis or treatment or care for illness, injury, deformity, abnormality or pregnancy in any recognized system of medicine in India, and includes service by way of transportation of patients to and from clinical establishment, but does not include hair transplant or cosmetic or plastic surgery, except when undertaken to restore or reconstruct anatomy or functions of the body affected due to congenital defect, developmental active abnormalities, injury or trauma. Already we discussed this point a lot in exemptions, but what I want to clarify here is that since abnormality or a disease or ailment of infertility is treated using ART procedures such as IVF, it is clarified that services by way of IVF, that is in vitro fertilization, something like a test tube baby, are also covered under the definition of healthcare services. A very interesting clarification, which was actually important because some hospitals were under doubtful whether this IVF come under healthcare service or not. So they have given a clear-cut clarification that this service of healthcare in relation to IVF is also exempt. Next clarification, my dear students, in fact this is important. We know something known as Schedule 3, which talks about transactions which are neither regarded as supply of goods nor regarded as supply of service. There we learnt one point known as sale of land and building except construction services. That means whenever a person sells land or a constructed building after OC, that is occupancy certificate, then there is no question of GST. They have given interesting clarification that this land could be normal plain piece of land or it could be developed land. They have clarified that land is still land only and GST will not apply. See the clarification now, come on. Clarification regarding applicability of GST on sale of land after leveling, laying down of drainage lines, etc. This circular clarifies applicability of GST on sale of land after leveling, laying down of drainage lines, etc. As per para 5 of Schedule 3, sale of land is neither a supply of goods nor supply of service. Therefore, sale of land does not attract GST. Land may be sold either as it is or after some development such as leveling, laying down of drainage lines, water lines, electricity lines, etc. It is clarified that, this is important clarification, it is clarified that sale of such developed land is also sale of land and is covered by para 5 of Schedule 3 and accordingly does not attract GST. However, it may be noted that any service provided for development of land, service provided for development of land, like leveling, laying of drainage lines, as may be received by developers. Means some X person is giving service to the developer, and the service is laying of the drainage lines, water lines, electricity lines. That will attract GST at the applicable rate for such services. In fact, this was very important clarification, because lot of people, what they do is they take 5 acres of land, do the plotting activity, lay drainage lines, electric lines, water lines, and sell that developed land. So the doubt has come always whether the developed land sale will attract GST or not. So they have clarified very clearly that sale of land could be as it is, or it could be developed land after laying of drainage lines, water lines, electricity lines. Still it is not covered. That means it is neither a supply of goods nor supply of service. However, service of laying of lines, service of laying of drainage lines, water lines, electricity lines, that service given to the developer will attract GST. Now let's look at the last 1-2 clarification left out, my dear friends, which are given by virtue of circulars. Let's see that point, my dear friends. See now, clarification regarding hiring of vehicles by firms for transportation of their employees to and from work. We know that services of non-air conditioned contract carriage is exempt. But the interesting concept to be noted always is that exemption story will come into picture in case where, for example, Shivateja is traveling from Hyderabad to Mumbai in a non-AC bus, then it will be exempt. If I go in AC bus, it becomes taxable. But you have to understand that exemption is only when I am taking use of or I am taking service of transportation using that non-air conditioned contract carriage. But imagine I take one bus on rent. Then I decide where I want to go, when I want to go. Then it is as good as renting of that vehicle. For that renting of the vehicle, exemption will not apply. See the clarification now. The issue which arose for consideration was to whether engagement of non-air conditioned contract carriage by firms for transportation of their employees to and from work is exempt under entry 15 or not. 15B exempts transport of passengers with or without accompanied belongings by non-air conditioned contract carriage other than radio taxi for transport of passengers, excluding tourism, conducted tour, charter or hire. The said exemption would apply to passenger transportation service where passenger transportation service by non-air conditioned contract carriage where transportation takes place over a predetermined route on a predetermined schedule. The exemption shall not be applicable where the contract carriage is hired for a period of time during which the contract carriage is the disposal of the service recipient, and the recipient is free to decide the manner of usage, that is route and schedule, subject to conditions of the agreement entered into with the service provided. So if the renting activity is done, it becomes taxable. Services of transportation of passenger is exempt. Transportation of passenger service is different. Renting of the vehicle is different. So in case of renting of vehicle where receiver will decide the timing, route and everything, that becomes taxable. A very interesting clarification. Let's look at now the last interesting clarification given by the same circular member, my dear friends. Let's look at that. Clarification regarding applicability of GST on tickets of private ferry, that's a boat, used for passenger transportation. In fact, we know that transportation of passengers in a public transport is exempt, and you have to know one point very clearly here. Public transport doesn't mean that it is operated by the public. Public transport means it is open for public. See the point now. This circular clarifies the applicability of GST on private ferry tickets. For instance, private ferries are used as a means of transport from one island to another in Andaman and Nicobar Islands. As per entry 17D, transportation of passenger by public transport other than predominantly for tourism purpose in a vessel between places located in India is exempted. It is clarified that this exemption would apply to tickets purchased for transportation from one point to another irrespective of whether the ferry is owned or operated by a private sector, enterprise or by a PSU or government. It is further clarified that expression public transport used in notification only means that transportation should be open for public. It can be privately or publicly owned. Only exclusion, it can be privately or publicly owned. The only exclusion is on transportation, which is predominantly for tourism, such as services which may combine with transportation, sightseeing, food and beverages, music accommodations such as in shikara, cruise, etc. Those kind of things will become taxable. So my dear friends, these are all the very interesting clarifications which are given by way of circulars. In this context, my dear students, let me draw your kind attention to the amendment which we already discussed, which I'll reiterate now. That is, with effect from 1st October 2022, e-invoicing is made applicable to every registered person whose aggregate turnover is more than 10 crores. So 20 crores threshold limit is now reduced to 10 crores with effect from 1st October 2022. So my dear students, the concept of e-invoicing is applicable to every registered person whose aggregate turnover in any of the financial years starting from 17-18 exceeds 10 crores. Then e-invoicing is mandatory. So we just discussed that with effect from 1st October 2022, e-invoicing threshold limit is reduced to 10 crores from 20 crores. I hope we got a very good clarity on this point, my dear friends. In this context, let me also give you one more interesting clarification, my dear friends. That is, whenever in cases where e-invoice is generated, then in case of physical movement of the goods, there is no requirement to carry physical copy of the invoice. In the course of transit, if the person is able to produce a QR code where IRN, that is invoice reference number, is already embedded in that QR code, then submission of that QR code or production of that QR code to the proper officer would be sufficient. He need not carry a physical copy of invoice. An interesting clarification, my dear friends.